Have you seen these new AI solar batteries that lowers energy bills to zero with barely any investment on your part? This previously unknown product will soon be available across the United States, thanks to a collaboration between top artificial intelligence research barely any investment on your part. This Have you seen these new AI solar?
All right, guys. So we are going to start 1 minute earlier here. All right. Just to show you, all right, everything here. We want to make sure that everybody is ready for today's session. We have Nic Chahine in the house. Before we do all of that, guys, please go ahead in the chat. Let me know where you guys are tuning in from. Okay. You've been active in the chat. George had a pretty good day in the markets from what, you know, from the gossip here in the chat that I'm looking at. What's up, Luku? How you doing, Carson? Murray? Hey, what's up? How are you doing, guys? Mark, how are you doing, Mark? Juicy, Toronto. What's up, guys? Let us know. Maryland, Bishop, Baltimore, Texas. Good stuff. We got one guy from Florida. Shout out to that one guy. Toronto, what's up? James, Anthony, Eric. Okay, the usuals. All right, guys. So we're about to get started here with the session. I think that, hey, Alex, I think that Nick is in the house.
I am. I am.
Okay. Hey, how are you, Nick? How is your day going?
I'm tired. The day is going great, but therefore I am filling up while you were talking with pre-workout stuff. I ran out of Bang, so I had to switch to pre-workout stuff. Hopefully, you'll get me up and running. We're gonna have a good time.
Yes, absolutely. And I know you have a surprise plan for everybody. Is that
Well,
right?
not everybody, only the ones who end up actually doing
Oh, okay.
something.
Okay. All right, Nick. All right. I
No,
don't know
no,
what this
I'm
surprise
going
is.
to show everybody a few little secrets on what goes on behind, not behind closed doors. Hey, California. So, what goes on in trading rooms when people get together and trade as a group,
Mhm.
how they can get more success, get to be more successful. I'll have a specific example, a few examples today, um, but we'll talk about that later.
Right. Right.
I
Eric, shout out LSU, man. Go, Eric. Right.
so I think we can. You let me know when you want me to share my screen, unless you have an agenda.
No, the agenda here is to, get it going fast and quick. Everybody's excited. Everybody's ready for the session here to talk about options, Nick. So
Okay.
I know you have something planned. So let's just, let's get to it.
All right. So screen one is this one. All right, we'll go with that. All right, you guys and you people should be seeing my screen right now. So what we're looking at is the S&P. But first, before we get into anything, give me, since we're going to be talking about options a little bit later, I think we should also talk about technicals and overall thought process, how the modern investor is not the old school way. And by old school, I mean like just a few years ago, not like 1977 way, but just a few years ago. Things have changed. Not the process. The logic is the same, but how we do things, we have more tools. We should use those tools. Give me a one in the comments in the chat if you have never done options and you're basically into this conversation just with a blank slate. A lot of ones. So, okay, we're up to like 30% if I'm counting fast enough.
Yeah. And the people on YouTube have a lag, but Victor, I don't know if you're looking at the YouTube, Nick, but Victor is
I am
saying,
not. I'm not. I
okay,
couldn't look at another thing. So I'm relying on you for giving me YouTube feedback.
this is what Victor is saying. I think Nick single-handedly educated all of us on what risk means and what are the two components of it. So there's definitely
Oh,
some
oh, so we have
familiar.
repeat people. So tell
Yeah.
them not to answer when I ask it again.
Yes. Don't cheat, guys.
Don't cheating. So okay, we have a larger screen, larger than this. What do you mean? I have a full screen on. Okay. So if when I talk about options, I will start from very basic, very fresh, in plain simple English. I will try not to use any Greek letters in there, which would be an impossibility when doing options, but I can do it. I have faith that I can do it. So you can go tell people and they'll say, what? Somebody teaching options without using Greek letters must be full of shit. Oops, excuse me, full of doo-doo. So we can prove them wrong. So first things first, this is the S&P. This was last week when the world was ending. I'm starting with this because it goes to the point of there's a word that I developed with people from the chat room. Sheeple. Don't be a sheeple. So don't be a follower just because you hear it, you see it, you feel it. Use logic. And the only way to do that is you have to learn the very basics of charts, or be a reader of somebody who's doing that. So in my group, a big part of my day is to keep people up to date with the charts. So not everybody has the time or the technical know-how to read the charts. So if they read a note, like before the day starts, don't do this, don't expect that, expect this, then look out for this, then they're less likely to be a sheeple, because those are the people that get hurt. I'll give you an example. So Friday, the world was ending, right? So, and then I don't watch CNBC, I have not watched it, like 0 minutes. I'm pretty sure they were talking about how people are running for protection, how what were they calling them? Whale trades now. This is the new thing I see across because people come to me with those. Oh, I read about whale positions. So if there's a whale position, I can guarantee you there's another whale on the other end of it. So it's two whales fighting each other. It's irrelevant to me. Let them fight it out. So don't listen to the news. You have enough information. So last week on the drop, the jobs report came out. I said, don't chase the pop. This is a bad report for stocks. And I said, they're misreading it. And we booked we were long into the morning open. We bought the S&P. And I said, I am booking my profits at the open. I left money on the table, but it turns out that it was the right thing to do because the markets turned around and crashed. And you saw it. It was painful. But we had enough information to discern that to figure it out. The unemployment rate came out super strong, low, and the participation rate grew. So it wasn't a fake drop. It was a real drop in unemployment. Therefore, the Fed lost its cover, and that puts pressure on the Fed to do its other part of the job. So the Fed's job is to grow jobs and without creating inflation. Well, for the last year, they've been saying, forget about inflation. We're going to create it on purpose, and we're okay with it because we want to get this unemployment under control. Well, job done on the unemployment, get off the morphine. So that was a telltale sign that, hey, I don't know what they're rallying on. The bond market spiked. That shouldn't have happened. So it was not fear of the Fed acting. It was not fear of COVID. Something else dropped the market on Friday. So I said, I'm taking longs into Monday. And guess what? Those longs are still going on to today. And those who took them, it was a huge win. I'm not boasting. I'm telling you that you don't need news. You have enough information available to do this on your own or inside of a group that knows what they're doing. So a crash these days, being up only 0.5% is a crash, apparently, right? So that's my preamble, that don't listen to the news, read the headlines, get the information from the source, don't take the opinion that comes with it. So if you listen to CNBC, you're not getting news. You're getting opinion on whatever. So Steve Leisman probably came out and told you what the Fed said. Why don't you go read the Fed note and listen to him and get his... I'll give you a perfect example. You know what transitory meant? 99% of the people don't have a clue what he's talking about. When he said inflation was transitory, the Fed head, Powell, he didn't mean that inflation was going to go back down. The transitory part was about the rate of increase. He said this increase, the speed of increase in inflation is going to go away. It's only temporary. Not the inflation part. He was not addressing the inflation part on the transitory. He was addressing the speed with which inflation was growing. He finally defined it like 2 meetings ago, and nobody said anything about it. I believe a woman reporter asked him, what do you mean by transitory? And he defined it. The speed with which inflation was growing. Go back and watch it.
I think this is one of the great benefits, Nick,
Yeah.
of you breaking down the news, because people that are just starting, they really don't know what to make of it. Like the Fed
Right.
saying this, and what does that mean for the
Yeah.
stocks or the calls that I have?
Right.
So
yeah,
it's
so
a good
if
explanation.
Rodrigo, every trade setup I share has a video, and the first part of the video is, here's what the world looks like. That's why I always start with the S&P. Okay, so I'm sharing a trade about blah, blah, blah today, but first let's look at the market, because I don't care what that trade is. If the market is not healthy or looking to drop, then I shouldn't take that trade. It's going to drop too. So it doesn't trade in a vacuum. So this is very important to know what's going on.
That's a mini lesson right there from Nick. A mini lesson, right?
Yeah. So Joseph says the Fed comments were misleading by design. I think the Fed is too stupid to mislead us. But anyway, so back on track for today. Hopefully out of today, we will have a good idea as to what options are and how one could use them. So I want to also erase the misconception that they're more dangerous than stocks. They can be, but they are not by design. So you can be reckless. And of course, because they're better than stocks opportunity-wise, if you misuse them, they can hurt you faster than stocks as well. Where can we find news other than CNBC? Depends what news you want.
I know where. The best place.
Yeah, the best place is Benzinga.
Benzinga.com. Go to benzinga.com for news.
What I do with Benzinga, by the way, they have very fast news. So if you're looking, quote, for headlines, I used to rely on Twitter, but now I have another source that doesn't come with the junk from Twitter. So speaking of Twitter, follow me on Twitter. It's @RacerNick without a K, or StockTwits, or both, whichever. So @RacerNick.
Yeah. On a separate note, though, actually really go to benzinga.com.
Yeah.
You get amazing news, hundreds of writers and editors. And, besides that, you bring that back, whatever you read, to Nick, and you're going to find tons of trade ideas, because Nick is back and forth with everybody there.
So I get a lot of questions. Hey, I heard there was an upgrade on Apple today. Like, I couldn't give two rips about that, because the system that they have for rating, like, it's a downgrade. The other day, somebody, like 7 or 8 people downgraded, I forget the stock, Teladoc or something else, whatever. Their price target was 207. They downgraded it to 206, maybe PayPal. I mean, what's the point of that downgrade? And by the way, that price was still like a 30% higher than current price of that ticker. I can't remember the ticker. And it was one of 12 downgrades in the same day of price tickers, price targets on the same ticker. So clearly that was an assault to bring down the price to a place where they can buy it cheap and then upgrade it and say, hey, look, we made a good call on this one. So Wall Street rigs the game. They cheat. We can play along and still win.
By that, you mean when like hedge funds meet, or just funds meet in general to talk about trade ideas?
It's not a coincidence that 9 to 12 houses, JP Morgan, blah, 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 they all downgraded that stock. I can't remember. It happened to Teladoc at one point. It happened to PayPal at one point. And it happened, I want to say, to Peloton. I don't know, one of them. So that one day, one of them was 207, downgraded to 206 price target. And it was miles away from current price. What's the point? Just to make a headline and to put your name out in the news. That's it. That's the point. It's totally misleading and useless. So I don't listen to these guys. Somebody upgrading Apple, if I go Apple now because somebody upgraded it, I need to give my money management to somebody else, because that is like the most ridiculous reason to buy Apple right now at all-time highs. Swing trade. Sure. At the end, we'll talk trades if you want. I'll share a few with them actually with you. So let's get back on track. You have the tools. Don't listen to the news. Read the headlines. Explore the data from the source. Like, if you want to know what the Fed's doing, go to the Fed's headlines and read what the Fed said, and watch his news the question and answer afterwards. That's where the real information comes out. And if you think the stock market is falling, please, the one headline you need to throw away. I made a joke the other day. When was the day when the markets fell hard? Friday. The Dow closed flat, right? So the headline was, so here's what happened. The Dow closed flat. The S&P fell 0.8 or whatever, so slightly. And the NASDAQ fell 1.5%. That was the worst one for the day. So the headline said, the NASDAQ fell 1.5% today on jitters from Omicron and whatever, and Fed rate hike fears. That's what the headline said. So I took a picture of it jokingly. I scratched it off and we reworded it and posted it on Twitter. I said, the Dow shrugged off fears of Omicron. Used the same headline, except said the Dow shrugged off instead of the NASDAQ fell 1.5%. And so the Dow shrugged off this fear, blah, blah, blah. So you can play the news however you want. Just know what's going on and trade it according to the lines and the logic and the fundamentals. Forget what other people think. Ignore the opinions unless you do your own homework. What is it? Trust but verify. You read an opinion, verify it. See if it makes sense. Don't be a sheeple. Okay. Options. How about we talk? Options. We'll go back to charts, I promise. Oh, wait, you wanted to talk about charts right off the bat for AMD and such, or later?
You could just mix it in with what
okay,
you have
we'll do
planned
options first. We'll do options first. Okay, before I do options, apparently somebody on YouTube already knows the answers to all of this. What is this? That was Intel. Okay, by the way, I said go long Intel a couple of weeks ago. I said it's too cheap. Did you know that Intel is bigger than NVIDIA and AMD put together twice over? Yet it's priced like a bank. It's so cheap. It's incredible. Okay, so risk is basically what we're doing. What you do your homework, you find an opportunity, and you take a risk. So I'm going to give you a few things that, in my opinion, should be on a sticky note next to your monitor or next to your keyboard, that you shouldn't take a trade without it. So first things first, we have to define risk. And I'm going to spare you the quiz, and I'll just tell you what it is. So in my opinion, the best way to represent risk is to break it down into two different segments. I hear people say, oh, I'm managing risk. I know what I'm going to lose. Okay, that's one part of it. That's not all of it. And in fact, that's not the part you manage. That's the part you, don't worry about those numbers. I'm using this as a scratch pad. That's the part you decide on and you move off. So number one part of risk is, what's the consequence? How much can I lose? Is that big enough for you? How much can I lose? That's the number one. You sit down, you debate it with your family. If you're alone, you decide, okay, I'm okay losing $500. I'm okay losing $5,000, whatever that amount on that particular risk, regardless of what it is. You decide on it. You say, okay, that's appropriate. If I lose all of it, I don't want to, but if I do lose it, so be it. So that's part one. Part one. The second part of risk is, what are my odds of success? That is the part I manage. So I'll give you an example. If I decide to risk $5,000 on a trade on AMD, for example, I'm making this stuff up. I at the time, I have a reason, and I usually would do homework, and I decide, okay, I think I'm better than the opponent because there is an opponent. If I'm buying Intel stock, I'm AMD stock, if I'm buying AMD calls, if I'm selling a put in AMD, there is the other side of that trade. I'm not taking it off the shelf. In other words, if I buy shares, somebody's selling those shares that think I'm wrong. Otherwise, why would they sell the shares? So it's a competition. So I assign myself a percentage. And luckily, in options, this comes to us on a piece of paper. It's printed. I don't have to assign it to myself. I just have to choose the one I want to use. And that allows me to then manage my risk based on how that number changes from the time I take my position. I'll explain it to you later, but I want you to grasp the difference between this and that. First, I make the decision I want to risk 5,000 and I move off of that. I don't revisit that. Do not average down. That is a loser attitude. You average in, but not average down. I don't know one professional trader that averages down. So you average in, and I'll explain the difference in a second. Second part of risk is what are my odds? And that's the part you manage. Let's say you take the trade 2-3 days later, a week later, things change. You learn new things. The odds of success on that particular trade dropped. Then you have to revisit it. You know what? I'm uncomfortable with my advantage in this. My percent dropped to below the acceptable level, and everybody has a different level. Therefore, I should take the trade off the table or get smaller or get bigger. But I wouldn't average down. So here's the difference between averaging in and down. If I usually buy 100 shares and I buy the 100 shares and then stock drops and then I add another 50 or add another 100, I average down. I don't like that. I have a problem. I made it bigger. That's all that does, especially if I do it too quickly. So what is averaging in? Averaging in is if I take 100, usually, I take 50, and then if it drops, then I add my other 50 or 10 or 20. Now I averaged in. I didn't average down. So whatever my risk is, I didn't add to it. Whatever my problem was, I didn't add to it. In fact, I made it better because that's what I wanted to take. I refrained and took half. I added the other half at a lower price. So I ended up entering here at my proper sizing. Versus here, now I have a big problem. So a bigger problem than I would have. So that's the difference. So first, the definition of risk. Break it into two pieces. How much I'm going to lose? What are my odds of winning or losing? So what's the consequence if things go wrong? And what are the odds of things go wrong? However you want to word it, it's two pieces. That's what I manage. That I shouldn't touch. Okay, so we've done that. We've decided on we've defined risk. In options, it's pretty important to use that edge because it's available to us, the odds, the percent. And I'll show you where it lives on an options chain. So the other thing I wanted to also put out of the way is another acronym that I use, and you should put that on a sticky note. This one will save you thousands of dollars. I can guarantee you that. So get that piece of paper ready so you can write it down. All right, so NT. I'm going to claim that I made it up, even though I think I heard it like 15 years ago. Similar, so I adapted it. So this says no trigger, no trade. If I don't have a specific reason to take a trade, I should not take it. So I get about a dozen questions a week. I'm in trouble with this trade. What should I do? My first question is, why did you take the trade? I know it sounds insulting, but it's not. I really want to see if they actually have a reason, or did they just wing it, or did they FOMO into it that chased everybody else? But then you tell me that you're not a chart person, so you don't have a trigger. Then I say, okay, this T stands for thesis. So no thesis, no trade. And I'll give you a specific example later from today. What's the difference and how they played out? Which one was better? So I think it was going to go up. It's not a thesis. I think it's going to go up because I know this and that and this and that, and not everybody knows it. Okay, now that's a thesis. Or I think it's going to start going up because it fell into support from the other day. Okay, now we've got a thesis. But I think it's going to go up, period, is not a thesis. Okay, so NT, put it on it, whatever, just basically you want the last minute check. Hey, do I have a reason, or am I just jumping in because it feels good or it feels right? If you're a good feel guesser type of person, go for it. I am horrible at guessing. I'm pretty good at planning around a set of circumstances. And this is the difference. I make my own consistency versus depend on a sheer luck to be consistently winning. Okay. Now, if you want the last litmus test, this one is on the ridiculous side, but it totally works. I think my mother is close to 90 and doesn't know, I mean, is very technically averse. She does not like technology. So if she came to me and said, hey, I want to invest a lot of money in so-and-so in the trade I'm at, so would I give my mother the trade I'm trying to take? If I wouldn't, I shouldn't take it. Or at least I should label it somewhat speculative. So then I'm truly honest with myself, whether this is something that's sure or just, I'm not so sure about it. So if I'm sure enough about it to give it to my mother, then I have a clean conscience that I'm okay taking the trade for myself. And whenever you take a trade, you should have an exit strategy, good or bad. So a stop loss and a stop gain. I don't know if you want to call it that. Target, and not the eventual target. Like usually I don't know a lot about crypto, but I'm getting up to speed, and I learned a nasty lesson yesterday, just last night. I kid you not, midnight. I'll share it with you later if you want. So I haven't had a losing trade in crypto yet. I haven't been active a lot because I don't overthink it. Crypto crashes, I get in, I book 30%, and then I don't overthink it. So last time I bought Solana at 140, I think it went up to like 185. Anyway, I closed it at 32%. So that was my target. Anything above 25, I'm going to book. So have an exit strategy, good or bad. All right. So now off to options. Here we are with trading. This is my practice platform on eTrade. I am not recommending it. It has bugs, serves a purpose. It's a good presentation platform. Okay. The benefit of joining the group, well, you get to spend the day with me. More on that later. Chat room open all day, debate open all day, the learning process open all year, and the trade setups shared daily with videos, officially 4 times a week, unofficially way more than 1 a day. So it is an active participation in the market. And if you have a question or you want to debate an idea, or you want to say, I am in trouble in this trade, how can I fix it? We're there all day, every day. I was literally on all day yesterday. This whole weekend, I had almost no downtime. I caught a couple of shows and that's it. The rest was working with the chat room or working on programs for the chat room and some presentation things here and there.
Yeah, Nick, since we're getting a couple of questions here from the chat room, I just want to get this out of the way so we can focus on the education, guys.
Sure.
Nick's chat room, basically, it's a full trading room. It's open 24/7. There are sessions on Sundays where you guys meet for about 1 to 2 hours. Nick goes over about, I think, 100 to 200 tickers, something like that, Nick, every Sunday.
Sunday, it was 129.
129. Okay, so you do that every Sunday with Nick. He's there from the early morning. He gives you a pre-market update. Basically, you're trading next with Nick. He's mentoring you depending on what level you are, which it doesn't matter if you're just starting or if you're advanced. Nick is there to either be that trading partner, that, you know, that second opinion, or to be that mentor that you need to hold your hand so that you don't have to learn options by blowing up your account, pretty much, instead being consistent with this. So I'm going to put the link down there, guys, and any other questions, we'll cover them at the end. But in the meantime, Nick, go ahead and show everybody what you're doing there in the chat.
So this is the list from this Sunday. Nick should take the day off. So this is the actual list, alphabetically sorted. And I send out a request page and they go in and plop in their tickers. I had a request for 129 tickers. 128 because one is 2, Z and ZG is the same ticker. Nevertheless, this is it. and I put in my comments, and this sheet is made available forever afterwards. They can just simply click on the chart. This is a static look on that, but at least if they wanted to refer to it, it's there. And there's one sheet for every Sunday. So 2 Sundays ago, it was 112, I think, from memory. The one before that is like 105. So it's been over 100, and the sessions have been 2 hours plus. This last session was 2 hours and 1 minute. I record it and I share it. So if you're looking for value, whatever freaking price they're charging you here today, it's an insult to me, but I'd love to have you in there. So the program is working because the education piece, it's empowering people. You know how they say you can show somebody how to fish or give them a fish to eat or something like that. Well, in this case, we're finding the right fishing pole in order to learn how to fish, and then so you can fish on your own. But I still would say people stay in the chat room because of results, and I'll share a little bit later to show you how those are extending going forward. Rodrigo doesn't even know about it. So
no, I don't know what this is. So
something happened yesterday. I know they did it again today, and I think I'm going to do it at least a couple of times a week. Today, it produced immediate results, and I'll share it in a second. So
really quick, Nick, someone's asking if those comments, so you're leaving personalized comments for every ticker?
those are not everyone. Wherever I say something that there's something to be said, like, let me see why I didn't say anything about CVS. There was nothing to be said. I said it on the chart. It has support, it has resistance, it's right in the middle. There's nothing to be said. But if fell into weekly support, filled bearish pattern, but earnings are coming, and so caution still, I don't add. So I had a specific thing about Coupa to say. So if I see an opportunity, and some of them I saw an opportunity, I just followed up. The ones with yellow, I actually had a special video for them. So I don't know if you remember, when we had the crash, I was like, holy crap, I bet a lot of people have a lot of questions. So I did 3 major videos for the Fang Gang, Microsoft, Apple, and Tesla, and then another video for Disney, Boeing, and a couple of GE maybe. But anyway, so Intel, I did some for the semis. NVIDIA's in there, Roku, Tesla, TSM. So we go above and beyond. If you're looking for value, I'd be shocked if you're not impressed. I'd be shocked if you're disappointed. So we bend over backwards as a team. He said, stop out, not top out. Stop out. You don't get my comment on Chegg. You weren't in the room. Let me see. What did I say? Chegg was a buy. I said I'm interested, and I put an asterisk against Chegg. Except today I was too busy to trade it, and yesterday too. Chegg. Stop out. That was a stop out. And let me see here. Maybe I said it on the chart. Stop out if it goes below that, but it is a good spot to, if I wanted to go long, that would be my exit point. Good catch. Jeez. An accountant. How E-Trade like pro. Get on. Okay. What a day. All right. What a day. So let's talk options. What are we on? Pen? No, let's not do pen. Let's do something else. Coin. And we'll go, current price is 286. All right. So this right here is called an options chain. And the ticker is coin. It's the stock. Wall Street calls it the underlying. So first of all, what are options? I have several of them. They are contracts. And just like any contract you've seen, it has terms. Part of those terms is duration. How long is the contract for? I'm going to pick January. So this one has 45 days. And the reason why it's 45, it's because this particular contract expires on the 21st of January, somewhere in the middle of January. So it's called the monthly contract. Everything in white is a monthly contract. The ones in purple are weekly contracts. Like there's a contract that expires this week, only 3 days on the clock, and 7 days after that. So this one expires on the 10th, on the 17th and 23rd and 31st. So they are staggered across time. They go out to 2024. And the long ones are called leaps. It's just the nomenclature. I don't think it's a designation of type of contract. It's just the time on the clock. Ticker is coin. That's Coinbase. Yes. So let's go and pick January so we can expand more about what are these contracts for. You've heard the term put option. That's this side. They're all puts. You've heard the term call options. That's this side. They're calls. Neither is bearish, neither is bullish. They both can be both. It depends on what you do with them. Most people, when they think options, they think buying. So you've heard the term, if you've taken any options class or read any options book, I can guarantee you somewhere in the middle of the first page, it said, most options expire worthless. So in that case, you should just say, direct me to the room where it teaches on how to sell them, because I want to be mostly winning. So I don't want to be mostly losing, which is what happens when you mostly buy options. I'll elaborate on that in a little bit. So let's continue with the definition. They have types. One is a put, one is a call. They have time limits, and they have another part of the quote terms is the price levels. And you can see they're available for many prices. The weekly ones have dollars and sometimes 50 centers. I picked the monthly one on purpose. It's a simpler view of it. Nice, easy, round numbers in $5 increments. So let's go on to quote defining them. And I'm going to use the put side first because it's easy to define it. Good for you, Bill. You should be in the group. So we have, if you're nice, so we have somebody, let's say, owns 100 shares of Coinbase stock, and they are nervous and they want to buy protection. Oh man, is it expensive? Holy crap. Okay, so maybe this is not a good example. If you're nice, join the group. I bet you'll be happy. I promise you'll be happy. And if not, you can leave. They give you your money back. So I'm going to switch, come back to Coinbase in a little bit as a trade setup, because these are just too expensive. Nobody will believe me that they're doable. We'll go to Apple, another well-known name. Now the numbers make more sense. So if I own 100 shares of Apple, and I want to protect them for the next 45 days because I'm going into a hospital procedure, I'm going on vacation or something where I can't pay attention to it, and I'm nervous about the market, I've heard something bad, the virus this and virus that, and I'm panicking, I can buy protection. So here's how it works. Let's say I entered Apple a while back. I'm okay losing a little bit. I just don't want to be bleeding all the way. So what I would do is I would buy a put at 150. I'm using this randomly, and this is not a recommendation to trade that particular contract. So what does that afford me when I'm buying this put? Buying one put, it's $1.25, but that put, every contract represents 100 shares. That's another part of the terms I forgot to mention. So they have time, they have levels, and they have quantity, 100 shares, whatever it is. So in this case, that will buy me protection at 150. So let's walk through it. I buy it. Who's selling it? Well, somebody else out there, and I'll get to that point in a second. So they're the sellers. Why would they sell it? So let's go to the Apple chart so we can put it to words. Apple. So let's say it's like, gosh, dang it, I wish I was long Apple. I wish I had bought it at 150. I'm pointing at where 150 is. See where it is? Never fear. You wish you had bought it at 150. Sell the 150 put. What does that mean? So the seller of that put is hoping Apple would fall so they can buy it at 150. So they're not bearish Apple. They want to be part of it. They just wish they had started earlier. So now they're trying to make money from that. So they sell the put to buy the shares. That is super important. Do not sell puts of shares you cannot or you do not want to buy. I know you say, hey, I don't mind. I bet you 80% of you say that. You would need a diaper change if the stock crashed. And then suddenly you're faced with getting assigned at 150, even though it's a bargain and a good support level. And you see it and you go, oh my God, I changed my mind. Let me buy it back. That's a different conversation. So in this case, me, the buyer who owns the shares, I want protection. There is a seller out there who doesn't mean the stock any harm. They just really want to get into the stock at 150. So it's a win-win situation. I buy peace of mind. They buy the opportunity to buy Apple. So how does that play out over time? I bought it. Time passes. The value drops because there's less time on the clock. The value of the contract shrunk because now there are fewer days on the contract. It's less valuable. So that's what they call they call it theta. It's really time ticking. Yep. But they can't use the letter T because that's just too boring. They have to call it theta. So time decay, time ticking. Yes, time decay. Another decay. I would never use the word decay in my life in regular conversation unless I'm like a forensic pathologist or something. So yeah, time decay. It's time ticking away. Less time on the clock. So the idea is, I'm okay. What does this afford me? This affords me the right, but not the obligation, to sell my stock at 150. So who's on the hook? Who buys it? The person who sold me that put. I don't have to know them. I put the order here and it goes through and they match up my order with somebody else that sold that 150 and then the deal gets done. So let's say Apple falls to 145. At any point in time between now and 45 days, I can call my broker and say, I can call my broker. I don't have to call my broker. I can call my broker and say, exercise my right to get me out of my shares at 150. My shares leave my account at 150, even though they're at 145 right now. And I basically had a good deal because I only paid 125 for it. So I saved myself 375 of paying. Okay, that's one way they apply. So I have the right, but not the obligation to do that. Okay, so it is same as like if you buy insurance from say Geico or whatever, and you have a fender bender and you don't want to report the claim, you don't have to. They can't come and say, hey, you have to report a claim today. Today you have to report the claim. No, I don't have to. So, so the seller does not have the right to call their broker and say, hey, I sold the put. Can you give me the shares? No, the buyer is in control. So when can the buyer do this? Can anybody answer this? This is a quiz for somebody who knows a little bit about options. If Apple is a 150, 152, can the buyer of the put exercise their right on a 150 put? Anyone else? Anytime, Kyle. Ding, 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 ding. Yes, they can, Michelle. Yes, they can. If you said no, you're logically correct, but you're incorrect factually. So the buyer of the put can exercise their right at any point in time. But why would they? There we go. So we've got smart people in here as far as smart in options. Of course, everybody's smart. So yes, they can exercise at any point in time. Here's another tidbit. If it's expiration day and price closes close to 150, but not quite, your broker may exercise on you because the person holding, the broker might force close it for you because the person that bought the put has until 5 or 5:30 to exercise. So the aftermarket price action could cause you to get assigned. Therefore, the broker, if you have a smaller account, might close the trade on you. You'll look in your account like, where's my trade? The broker acted on your behalf. Anyway, we're getting wonky. So the buyer of the put owns the right. The seller of the put is obligated to live with that decision. I sold the put on X last year at 9. It went to 4.8. They never assigned me shares. I can't believe it. I made money on the trade because of their idiotic way of how they handled the put they bought. I mean, it fell half as much. I couldn't believe it. Anyway, I was like every day waiting for it. It never happened. It was like, sweet. So the definition is very simple. The person bought it, the put, has the right. The person sold it, is obligated to sell it. And you can't just buy protection all the time. Otherwise, it just eats into a lot of the profits. But when there's Wow, there's 100,000. So otherwise, when do I do this? Whenever I feel like either my portfolio is too long, or I am literally cannot look after my portfolio, then it's okay. Or if there's a huge event that's coming up, or if I have a thesis that's bearish, like if I think in the next 3 weeks there's going to be nuclear war or something, God forbid, I should protect the crap out of everything. But it's not a bearish behavior, because if I was really bearish Apple, I would sell Apple. I wouldn't pay insurance to keep a bearish thing. That'd be silly, right? So, here's why I say it's bullish and bearish. So the seller of the put is bullish. They want to own shares. They're bullish because if they don't want to own shares, they're trying to game the system and create income out of thin air, which they could do. Because if nothing happens and nobody gets assigned anything, the seller of that put just created $125 out of thin air. No money left their account. They collected money to open the trade, the seller of the put. Yeah. So it's a good way of creating income if you have a good size account and you don't mind owning shares. Otherwise, there's a variation of selling a put, which is called a credit put spread or bull put spread, that creates income out of thin air, and that's really my home game. So definition wise, it's a way for somebody to buy protection. It's a way for somebody to get into a stock. Same transaction. So it's a win-win situation. And of course, the broker wins. So it's a win-win-win situation. Now, you've heard of people shorting stocks. I'm going to give you shorting strangle. No, I'll tell you why, Bill. So in this day and age, with what happens with GME and with all these maneuvering in Wall Street, everything is rigged type of a deal sentiment where it's a Wild West. The SEC is not doing anything about anything. So shorting stocks the traditional way or selling naked calls is absolutely forbidden in my realm. No one should ever do it, not even for 5 minutes. But Nick, I've sold a strangle. Yeah, okay. So tell me who survived the GME spike or the Tilray spike when they shorted the strangle. Not any humanly possible with any regular account. They all went bankrupt. They liquidated everything. Okay, I know people who told me stories about millions of dollars, poof, gone because of one setup in one stock and one short squeeze. No, when there's an entity out there that's out to do this for a living and the SEC lets them do it, I remember days when this was illegal. You can't get together and push a stock artificially. But hey, it's happening. So, Bill, it happens in all stocks. Look at Palantir. That's a legitimate company. It went to the moon. It shouldn't have. It will eventually, but it shouldn't have. I wouldn't short calls anywhere. Bill thinks he knows what he's doing, and he may, and he can take the risk. I'm telling you, if you're new in options and you sell naked calls, you're making a big fat mistake. Yeah, take it to the bank. Okay, so the idea here is if you wanted to short a company with finite amount of money where you're not open. Okay, so Bill, what's the first rule of taking a risk? What was the number one I just put on the screen earlier? Number one, know how much you can lose. When you short a stock outright, the risk profile is unlimited. Unlimited. So therefore, that is risk that is not acceptable in my book at any point in time. It's unlimited amount of risk. If you're taking a risk where you don't know if you're headed into a straight wall after this black hole in front of you, you shouldn't be accelerating into the black hole. Okay, stop losses. Yeah. So have you traded through the flash crash? No, stop losses don't work all the time. And when the stock is short of borrow, you're going to need to outbid to close your short. Good luck with that. Why? What's the point? To make $3? It's just ridiculous. You can do a call spread and short that, then you know your maximum loss. But to short a call outright and short a stock outright, it's just, unless you're playing with hundreds of millions of dollars where you can withstand the pain for a couple of hours, it's ridiculous. The risk reward is not right. Anyway, my 2 cents, you feel good with what you're doing, go for it. startups and options, if you sell a call naked, you're making a big fat mistakes for startups and options. Bill sounds pretty solid. If he knows how to do it for himself, or Wyatt, then fine. I forbid you from doing that as a starter. That's it. So to short a company, you could buy a put, because if you don't own shares, so you're not buying protection. But let's say I had a thesis. By the way, we made money on Apple like that today in the chat room, and I'll show you in a second. So if I think Apple is falling, traditional shorting says, hey, Bill, give me your 100 shares of Apple. I'll return them to you. You take the 100 shares from Bill, you sell them, you put the money in the bank. It is now at 171. So you collected $171 per share times the 100 shares. If you're correct, Apple falls. You return the 100 shares at the time you buy them at 150 or 155. The difference is your profit. So to do the same thing with options without the unlimited risk of being short the stock, because if the stock runs to 180 and above, and if it super spikes like GME and goes up 500%, you're losing every step of the way. Hedge funds folded and had to liquidate their assets. Look at the Discovery charts or Fox 8 charts. This chart, what is it, Fox? Discovery A. Okay. This crash is because the hedge fund that was shorted up here had to liquidate its assets to cover its short. And that's a hedge funds with millions. Gone. So tell me, why didn't they have a stop loss? Yeah, they probably did a million ways, but they just got assaulted. So imagine you, just poor person, had a short like them on Discovery A that's been working for a long time, and suddenly this happens. There's no freaking way you can get out of it without massive losses. That's my 2 cents. And if there is, you're taking a big chance on it. Why? Let me show you a different way. So you buy a put, and if you're right and the stock crashes, you turn that $100 into $500, $600, depending on how fast it falls. I did it to QS. So I'm an engineer. That's what I started out as, an electrical engineer. And I think QS will fail in its mission to apply a solid state battery into an EV application globally. They won't be able to do it. This rally, I said, I'm shorting it. I sold a call spread and I bought a put naked. So I collected money for saying it's not going to rally past, I think I shorted it at 36. And then I bought a put, which cost me nothing because I sold something to buy it. And then this happened and I booked good size win for the small trade that I did. And I was not exposed to unlimited losses. So there's no need for this unlimited loss situation to accomplish whatever you want to accomplish by shorting. It feels good to short a stock, I guess, and win that way. I don't have a big enough bank account to do that comfortably. George Soros might, not me. So don't trade like a whale if you're not a whale. That's my personal preference. So buying a put, stock falls, this put explodes in value. So then I can book my profits, 400%, 300%, 100%, 50% profit. It's still a big win with very little risk, finite amount. The maximum I can lose is 1.25. If I do one contract, the maximum I can lose is $125. I can turn it into $400, $600, depends on how far it falls. So that's a simple way of, quote, shorting a stock by using put options. That's why people say they're bearish. They're not. The first application, we said two things that were not bearish. The person that buys a put to protect themselves, they're not bearish. If they were bearish, they would get out of the stock. The person selling them that put is not bearish because they want to own the shares. That's the spirit of selling a put. So the only bearish aspect is if somebody does not own shares and they just want to bank on the fact that price is falling, so they get in to buy a put. And then if price falls, that put gains in value. But you don't want to buy it too cheap. Like this would not be the one I would buy. This one only has about a 10% chance of coming to life, which will get us into the next conversation, the odds. First, I said, first part of risk is how much can I lose? In this case, $125. So what are my odds of success? This guy right here called the delta. Let me see if I can zoom in. Control. There we go. So this guy, that's the same call we were talking about. The delta is, the definition of the delta is pretty wonky, but I'm going to tell you how I use it. It's my odds maker. Look, anything about current price is 0.5 on the call side or on the put side. So that's the coin flip, 50-50. The further down I go, the smaller the odds for the buyer. So if I'm buying this one, hoping price is going to fall to it, to short Apple, I only have about a 10% chance that price is going to be there within the next 45 days. I'll use the extreme in order to illustrate that point. What are the odds of Apple being at 128 in the next 45 days? Slim. That's why the number is so low, 0.02. Okay, so theoretically 2 or 3%. Same for this one, 5%, 10%, 15% for the buyer. If I buy it here, it's at current price. I've got a coin flip almost, 0.5-ish. So if I'm buying a put to short the stock, I should pick one with a reasonably high number that still makes it a somewhat of a lottery ticket, but somewhat reasonable that it's, hey, there's a good chance it's going to be there. So personally, this will be the one I pick at least. In this case, I want something in between, so I'll probably skip a week and pick a 167.5. Today, the trade was to short it at 171.5 or so, and it delivered immediate profits exactly according to charts. And they said, oh, do you want me to hold it overnight? I was like, I wouldn't. I have no reason why I would expect markets to be down overnight. So this was a day trade, and we took it. So 0.3 delta to buy with 45 days is a viable way to short the stock with a tight stop. So we're touching over everything I just said. First, the size of the risk. Now I know it's $400. Second, my odds, 30%-ish. Third, my stop loss. So I spent $415. If I make my pain level be 20% less, so if I lose 20% of that, I should stop out. That's my level. You can pick your own. Or if it was a trade on a chart and I actually had a level on the chart that says, okay, if Apple falls below, let's go 5 minutes. So if Apple loses this number, I'm out. That means my thesis was wrong or something. Then I can make it I'm going to put that alert, a level exit stop loss alert. So one, look at how consistent, pop, consolidate. Notice that? Okay, so the idea is to set a dollar stop loss or a percent stop loss. Like if I lose $1 out of my $4, I'm out. If I lose 20% out of my $4, I'm out. All these numbers are based on your personal preference. Or if it was a trade based on a chart, if I lose this level, if it goes above this level, then I should stop out because then it's in the breakout mode. So why would I expect it to reverse? This would be to short it if I'm not short. So tomorrow, if Apple loses 169.50, the low here, whatever that value is, I would expect they will try to fill the gap. I wouldn't expect them to fill the entire gap, but they will go at least for that wick right here, which coincides with that wick right there. So now we're getting wonky. So go back to the definition. But I think this was a good way of wrapping up everything. The money at risk, $400. The odds of success, 30%. The stop level, I just gave you 3 or 4 different ways. And the action levels, I just showed you the triggers I just set to go long or short. Both setups. I wouldn't use puts to go short to go long, but that's the way it sets up. So that's one clear start to finish options definition with applied knowledge on a specific trade set up for tomorrow for Apple.
Really quick, Nick, here. Just want to give a shout out here to Jessica, Tom, and Lance for just joining here the Options Inner Circle chat room, guys.
So yeah, thank you for joining. I know you're going to have fun. So bear with me. I'm in here. I can't go welcome you over there, but this afternoon I'm super busy. So I will pop into the chat room 2-3 times, but I have a few things to write up before tomorrow. So somebody's asking, how do they derive the price on delta, derive the delta value? I don't know. Well, here's the easy part. It's always going to be 50-50 at current price, and it's going to drop away from that the further from current price you go. So let me explain what I'm saying. I'm going to zoom out a little bit to get more real estate. So current price is right there where the color changes. See that? So if I go to this side of the calls, the delta is 50-50, the delta is 50-50. 2-3 points here and there. It's not an exact science. So, and besides, price is 171. So it's in between these two things. So it's 50-50 right here somewhere between these two values, and it's 50-50 between these two values, right? So that's the delta starting point. So if somebody says, hey, I've got a 50% chance of winning, yeah, good job. You've got a coin flip odds. That's Vegas. There's no edge. You can assign yourself some edge because you did homework, but there's no mathematical edge. So if I'm a buyer and I'm buying a delta down here, I have a very small chance. It's like me going to a casino and saying, I'm going to beat the house today. You can't win beating the house. You can win every once in a while, but it's not a good idea. So don't fight the market maker. Figure out how options work, and you can trade along with them. So sell the lottery tickets that are losers. Like if somebody wants to buy that put, I would sell it to them because I have the odds in my favor. I become a micro market maker, a very tiny market maker. So what's the term market maker? It's not like there's a room where all market makers live in. Look, there's no market if there's no seller of something. If you want to sell sardines, you're a market maker of sardines. You can bring a can of sardine. Hey, I've got sardines for sale. Somebody will step up and buy a sardine. So if you didn't offer it, there was no market. That's what's called a market maker. So the easy assumption is that all the shit happens here because somebody's willing to sell them. So if the market makers don't usually lose, don't bet against them. When you're buying, you're by default a loser. Therefore, you should pick a place where you have good odds to flip that. So not as a personal loser, but in this trade. So it's very simple, and most people completely ignore this very simple fact. Okay, so I told you earlier the definition of the delta is kind of crazy, but the way they define it, let me see if I can remember, it's the amount change in the price of that option that happens from a $1 change in the price of the stock and the underlying, because it may be a stock, it may be an ETF. So the way to illustrate this, if I buy, you've heard the term, if you've watched CNBC, I remember back in the day, I don't know if he still does, Jim Cramer used to say, buy an in the money call, an in the money call. So now we're flipping over the calls, and I'll just transition into that. What did he mean? It means buy a call that's literally in the money. So if current price is 175, this is an in the money call. It's at 130. Okay. So why is it so expensive? It's $41. So if I go to buy this one, it's $4,100 for one. Well, it's because it's intrinsic value. So current price is 170. You're buying 130. That's $40-ish. That's what that is. Because what this gives me is yes, Bill, great job. See that? I'm all over that all day, Bill. So the idea is I own the right to buy Apple at 130 without having to spend $100 times 130. I mean, 100 shares times $130 each. I spend $4,100 and I'm guaranteed that price. Okay. So this is how the delta definition comes clear. So now the move in the stock price will have almost a one-to-one relationship with the move in the stock, almost one-to-one. Why? Look at the stock, $5.80 today, up $5.55. So this is 0.03, the difference between 1 and 0.97. Isn't that the difference between these two? that percentage, 3%, 5%, whatever. So that is the delta, almost 1-to-1. What happens to the stock happens to that call. Go out here. The stock was up 5 points. This option was only up 20 cents because this one has a delta of 0.06. So when you buy an in the money call, it's almost like you own shares, and you don't have that volatility that comes with owning a call out here. So to illustrate that point, let's do this.
Nick, really quick here for Sankar, who has a question there in the chat. I'm new to the stock market and options. Where can I learn? Do you teach what? So, I mean, he's asking if you can just, whenever you're done with this particular setup, just show the chat room so you can like actually show them what you're doing there, and they can have a better idea.
Sure. The answer is yes. That's what we do. I am not a trade alert service. I am not the best trader out there. I'm pretty darn good at charts. I'm pretty darn good at not making mistakes. I'm pretty darn good at stopping people from making the obvious mistakes. I'm pretty good at teaching the options. And my goal is to get you up to speed with your own trades and discuss your own tickers and take away some setups from me. And teaching is my core target goal. Okay. So here's the opposite of this. We're still talking about delta and the definition, typical definition, and how it explains the process of options a little bit further, which I doubt people do. So if I buy this put, is this an in the money put or out of the money put? You don't need to learn the Greeks. You just need in the money put. Yes, Michelle. Michelle is strong. In the money. Okay, so moving on. So this is an in the money put. Why? Because price has already fallen below it. That's why it costs almost $40, because the price of it is $210 and the current price is 70-ish. There's your $40, same as the other one, only the other way around. Its delta is pretty high, almost 1. So look at how it behaves better than one that's outside. So today the stock was up big time. Those who bought puts yesterday lost 40% of their money today. 40%. That really happens to Apple because Apple doesn't move that big all the time. So these guys only lost 13% because they behave more like a stock. That's why when you buy a deep in the money call, if you get a bad day, you're not getting shellacked like buying options up here. When you're buying an in the money put, for whatever reason, if you're shorting Apple, on bad days like today, bad for the shorts, you don't lose a lot because it behaves like the stock itself, a high delta. So somebody that bought a cheap put got blown out. They got stopped out, hopefully. Chances are they don't use stops because they're not good traders, but that's what usually happens. By good traders, I mean, I don't expect everybody to be a professional trader, but if you develop professional trader habits, you're less likely to fall to a silly mistake. We all make mistakes, but if you don't make it a habit and you make it a habit of not making silly mistakes, you're already halfway through to being a successful trader. I don't use automatic stops because I'm at the helm all day, every day. I just stop myself based on my rules, but I don't use automatic stops. The type of risk I take is not easy to set up that way, and it's easy for me to just, Okay, so now we've talked about the put side. We explained what happens when somebody buys a put and why somebody sells a put. Let me try to do the same on the call side. It's going to be a little bit trickier, but it's a simple concept. If I buy a call, I reserve my price to buy the shares. For example, let's say I'm running out the door. I want to buy Apple stock. I didn't do enough homework. 100 shares times $175. That's a pile of money. Okay, so hold the door. I want to lock my price in. So I would say, okay, for $500, I'm locked in at $175. So when I do this, I'm the buyer. I am guaranteeing myself an entry into Apple stock at $175 for 45 days. 42 days from now, Apple continues to rally, is at 205. I call my broker, dude, I'm long that call, exercise me. So you immediately get 100 shares of Apple at 175. You're profiting from 180 on up. Why? Because I paid $5 for it. So it better go 180 on up. So who's on the hook? The person selling it has to deliver 100 shares for every contract they sold. How is that? Okay, I got you. So how is that feasible for them? Maybe they need to exit Apple. Maybe they've been long Apple from wherever low they were, so lower. So it's called selling a covered call. Like if they owned 100 shares of Apple, they can safely sell a call against their shares if they are okay selling their shares. So then if they sell it here and they owned it from down here, then they're okay because they've gotten the money out of it and they just want to exit Apple. And if it doesn't go, if the buyer does not exercise their right, then they made an extra $5 out of thin air. So now they still own their shares if they didn't get exercised on and called away, and they've lowered their entry price by $5. All right. So earlier I mentioned the chat room this, chat room that. So the inner circle chat. Hey, somebody. Hello. So somebody just signed in and somebody's welcoming them. And this video, by the way, somebody said, hey, can anybody find a video for debit call spreads? So Thomas, who is my video person apparently, but super nice guy, jumps in and says, I have it, and boom, puts the link in there. Somebody said, do we teach? Yes, we do. This was a trade set up on Intel because somebody asked, they were long Intel because of my conversation with them. They booked at the open and they said, I'm looking to get back in. I said, well, there's a gap here. There's a poke here. So I drew a question mark around here. So I said, I would want to see this and pop and fade. So this is your entry point for a long-term entry for Intel. So he booked his profits and he's looking for a re-entry. Forgot his name now. I think it's Maffey. So let me see here quickly. That's somebody else's chart contributing.
Nick, someone is asking if they can direct message you, like if they have a specific question about
that's what happens
trade.
over here. I don't want to click on their names. If I expand it, their names will show up. But if you click on me, you'll get my window and there'll be an input box here for you to direct message me. That's me, yes, by the way.
I need to add that we actually have in final stages of development the new chat room. It's going to have a totally new look and feeling. It's already in the final stages. So what you're looking at, it's going to be different in about a couple of weeks. But This is the gist of what Nick is doing all day.
Also, I recently said SPCE would be a good long for the long term, like a kind of a buy it and forget it, because it's literally space travel. And so it's off to a good start. And I said, okay, they might stall up here because of these pokes. Whoops, I didn't need to do that. And then it could fade and come back and break out. So if I'm long, I'm okay holding it. It was a long-term trade anyway. And today was quieter than, oh, there's a trade setup. Okay, so that was Penn National, but actually this had 3 tickers in there as trade setups. It had Verizon, follow up on Coin, which I recommended to go long yesterday. It's up 8% today. Yesterday, I shared a video on Coin in the chat. And let's see here, Verizon and Penn. So Verizon is more of a long-term swing opportunity based on some pretty good metrics and levels. Penn is a riskier one, so I would definitely stop out quickly below this. That's my alert to stop out. But I think it has resistance, and I think there is room to get to 60 or 65 or 68. So I have instructions on how to get out and several ways of trading this. Buying shares, buying calls, buying calls. This is not for me. Buying calls, buying call spreads, selling puts or put spreads with odds and everything. Videos, 12-minute video, I think, 12 or 15-minute video with warnings.
Nick, quick question. That midday update, do you do that midday update every day or
every day? Every day, and 4 days a week, it has a video with a trade setup.
Okay, so just to clarify here, right? You have the pre-market update that you do like sometime like around 8:30 a.m. Eastern, and then you have the midday, and then you're just rolling along through the day for anything else, right?
Yep. And I'm trying to get to the morning update, but we're still scrolling. So this is an update on an iron condor I did on Boeing. I collected 83 cents and it's now down to 30 cents. So I have 50 cents in profit ish. I can buy it back to book it. But it was done on conviction. So I didn't get shaken out last week. That was my level of risk, 190. With 255 is a complete win. So I'll probably close that tomorrow or part of it.
Yeah, and
I'm
I don't know
trying
if you remember, you discussed Affirm a while ago,
Oh
and
yeah. Affirm. Let's see. What is
um,
this? RCL. So Affirm is one of my favorite when it was low, but up at the top is just like there's no way. Okay, there we go. The plan today: every morning before the market opens, 6 o'clock a.m. Pacific, where I live in California. So I will have this, and it's usually a blurb about what's going on, what I think is going to happen with the price action and the tickers, the indices, and the futures and the earnings. So this gets us ready. And on Friday, if somebody read this, they saved themselves a ton of money. A ton of money. So
I know
don't know
because
who's,
I popped in on the calls with Affirm, and I
yeah.
was watching it, and I know that you talked about Affirm like before it was triple digits, like a long time ago.
Yeah, these charts are not mine. Yeah, Affirm, I'll show you exactly where we went in. So by the way, this RT Harris, I believe he joined from the last webinar we did, which was like days ago. And today he was in my surprise. I guess we can go now. Anyway, so what I did yesterday new, which Rodrigo doesn't know about, and I did again today, is this. I shared my screen live all day. I updated the trigger lines on trade setups all day on all the indices. And today's Apple short played out. Oh my gosh, we played it like a fiddle. Yes, short. So up here, I said you can short Apple here on an NTNT where you have a thesis of, okay, it's going into on the 30-second chart at the time. I said it's got resistance. And if you short it now, you stop out on a new high. It faked us out with one quick new high. So hopefully they weren't fast enough to get stopped out, but we stayed in the spirit of it. I said the other way to do it is if it fails right there, you can't see it anymore, then you can jump on. And then all day I said, you want to watch out what happens on the pop, because the bulls were in charge. Then they fought over control for the bulls, sideways control. And then I said, we're looking for a developing descending trend. And immediately we recognized it. And I said, look, it's going to sell off here. 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 So it gave people a short for Apple from here down to here. I said the target was 170.6 when it triggered. It got to 170.6. I said, when it loses that, the target is lower. And it got to the target, maybe just high, a little bit high or close to it. And I said, okay, at this time you should be booking and then this incredible close. It's unbelievable. What happened to Apple aftermarket? So
shout out to Nick for going above and beyond for you guys.
So I'm not committing to this every day, but this yielded great results for RT Harris, which I believe his name is Ryan. So he was new, and I'm pretty sure he paid for the whole year from that one trade. So the value is not just with the trade alert, but with the lessons. All day I was saying what happens. The machines will buy this. And I said, all the while, I'm looking at the VXX trend, and that's what got us into it. And by the way, also I called the IWM drop to 222.5 was my target. And look at that drop. They went to 223. But it was up here when I said there's a scenario that puts IWM in the next hour or two, I forgot how many hours I said, down to here. And I have audio in that session off and on. So anyway, that's the surprise. That's a new feature only for chats. I don't advertise the link anywhere. It's just every morning I drop a new link for a new day, for a new chat. I can't do it every day right now, but I'm working towards it. Okay. What were we talking about? Oh, yeah, buying calls. All right,
But I
so
think it was you were going
buying
to go
calls,
over
I got it.
Affirm and UPS.
Oh yeah, you want me to do Affirm first? Okay, so let's go to Affirm.
Well, where you
AFRM.
got in.
So
And
the
all.
logic of Affirm was it was underappreciated, and I'll show you where my entry level was down here. So I said we're going to try to do this. I said that we're up here. The fade should find footing, and that's the trade. And then this happened. So up here, they said, what about Affirm? What about Affirm? I was like, hell no. So once a stock does this, it becomes a THTH, basically, a too high to chase and a too hot to short type of a deal. And now it fell back into support zone. So if somebody's now looking into Affirm, great, filled the gap, still another big gap. I'm still uneasy about it because I would prefer PayPal. I would prefer Square. I would prefer Visa and MasterCard. I would prefer SoFi, which was also a long trade that played out. SoFi is a bargain. Similar setup of business. They touch the consumers a little better than Visa and MasterCard. They have good alliances with other businesses. So these are good, solid core fundamentals that are misunderstood or mistreated. I mean, what the actual hell is happening here? Who is doing this? So clearly, who is doing that? So the person that bought it here, they need to be in the room. This is where I'd say this is not an obvious point of entry. That's to put it mildly. If you were the buyer up here, you should just look left. Because the question is, what happened last time we were here? Crash. Therefore, why would I jump in? But it's going to go. So what if I miss out another 5% instead of grabbing a fistful of 40% drop? So it's not going to crash up overnight. And if I miss 5-10%, so be it. Okay. That's we'll do tickers. I promise you we'll do a fast fire ticker. And that will be where you would sell yourself on the idea of being in a room. Because if that's your favorite part of it, that's what we do all day. Fast fire tickers. All right, back to the definition of calls. Boom. He comes in, they come in with pins, Baba, Neo, please.
Kowalski, how is hey? Could you remember Kowalski, Nick?
No.
We've been talking. Kowalski has been, through a trading journey, a lot of roller coaster, and definitely appreciates your input on the charts. I want to give a shout out to Jude, Tom, Aomith, and Nolanut who just joined here. We got a lot of people joining, guys.
Awesome. Which means my day is going to get busier and busier, which is awesome. The community is growing. The watch list is growing. That puts my eyes on a whole different bunch of things. Okay, so looking at finishing the definition of a call, it locks my price in. The seller gets out of their stock on their own terms. If you're shorting the stock by selling naked calls to give me my call entry, you're making a big mistake. I promise you should not be doing that ever. And most definitely if you're just starting out with options. Please, please, please. Okay. Oh, Jesus. That's a lot of money, dude. Holy cow. Okay, so the alternative, there are ways to short using selling a call, but it would involve to do it in 2 steps. You sell one, you buy one. So you collect an amount of money and well, that's wonky because I didn't 1 in 10. So in this case, I can make, $1,600 or $1,700, but at least the worst case scenario is finite, $3,500 versus the moon. So there are other ways. All right. So the definition of a call is it affords the buyer the right to buy the shares, not the obligation. So let's say I buy this, Apple goes to 200, whatever scenario I said, this call turns into 18. So I paid 500. Now it's worth $1,800. I don't even have to buy the shares. I just turn around and sell it. So I paid 500. It's worth 1,800. I sell it. I bank the difference. So it's pretty good dig, $700 out of nowhere. So I turned 500 into 1,800 or 2,200. So if you had a big what spiked big time today? Something. Anyway. Oh, MDB. Oh, let's go look at it. That would be a good example of how much money there is to be made in options if used properly. Now, buying calls into an earnings report is not using options properly because it's a coin flip. So, so these people bought their calls yesterday for about $1,500. Today, they're worth $2,800. So if they did one, they made $1,150. Right? So these people lost all their money that bought a put. So you can make or break an account if you're winging it. But let me show you a different way. Let me show you a different way, my favorite way of doing options. So my trade alert yesterday on coin, just yesterday, it's up 8%, 9% today. I didn't know it was going to go up. I simply saw, my thesis was, what the hell is happening to logic? What is going on with this world? So where is the reasoning behind falling coin because Bitcoin is falling? So they profit from trading crypto, not from crypto prices. So where's the logic? Crypto's crashing, coin crashes. It's ridiculous. So, the gold miners lose money if the gold prices fall. The people who sell shovels to the gold miners are going to still sell shovels. So it's weird. So I said, it's falling into support. Cluster. Yes, it could fall further. Yes, it's an unproven stock. Yes, it's expensive. Yes, it could be drawing a right-hand shoulders or a big head and shoulders, but it's a tradable bottom. Buy the dip opportunity. And I showed the risk in my video. I said, good Lord, if this happens, if this bounce fades because there is resistance, I already put it up there, and it comes back and they lose that candle right there, remember, they could lose it through no fault of its own. If crypto crashes, these idiots are selling it. If the market crash, these idiots are selling it. If both happen at the same time, it's going to crash. And if they lose this, then this is the target with a lot of support here. So there is downside risk, but here's my trade yesterday. I said, okay, so this is the table. I believe I went down to 200. I said, wouldn't I love to own it at 200 down here? There's the line right there in my video. I drew it on the video. Would I love to own it at 200? Has it ever been at 200? No, that would be a new all-time low. Wouldn't I just love it there if I was thinking about buying it here? Yesterday, it was January. Somebody would have paid me $5.50. So $550 if I would buy their 100 shares off their hands at 200. So if I sold this yesterday, today I could have closed it and would have made $260 out of thin air. No money left my account from yesterday to today. All I had to do is just take the trade, wake up, close the trade. That's it. If I did it 10 times, $2,600, boom, in. So what is my risk when I sell this? When I sold this yesterday, I told somebody that, hey, I will buy your shares at 200 in the next 45 days. That's it, 45 days. So effectively, let's say the stock went the other way. Let's say it dropped 8% today. So let's say price came down to 220. This 550 that I collected yesterday would have turned into 1,000 or 1,200. So this position would show tremendous losses, paper losses. I don't realize those losses unless I panic and I buy it back to close it. Oh, crap, I changed my mind. That's where the loss happens. Who does that? The person that did not intend to own the stock, they were trying to game the system. Use a credit put spread for gaming the system so you don't poop your pants and panic out of it. So if I sold it and I truly want to own it, I wouldn't even check it. So the worst case scenario, let's say price falls to 195. Let's look at the chart. Price falls to 195, clearly past my risk. And the day is expiration day, and my position is showing tremendous losses on paper. I would let it expire in the money. I wake up on Monday, that position that had all the losses will just simply disappear. with all the losses, I keep my $550 I collected to open the position. In place, I would own 100 shares of the stock at 200. But you're saying you lost money. No, I didn't. My break even is 195. I collected more than $5. So my break even is 194.50. So then I start losing as if I had just bought the stock at 194.50. So that's the worst case scenario. Imagine somebody buying the shares now and being down $80 and then another $15 before they meet me at break even. Tell me options are not safer than shares in this instant. It depends on how you use it. That's all there is to it. So you have to like the stock, you have to want to own the stock, and then the world is just look at the prices that are available here. Somebody will pay you $800 to buy it at 235. Your break-even point is $8 lower than 235. If somebody wants to buy the shares right now, they can collect almost $2,000 to say, hey, I will take it at 270. Clearly, high delta, the odds is going to be that it's going to be dramatic. It's not going to be a snoozer. There is no easy wins on Wall Street. If you're doing a trade and theoretically you're going to collect about 40% yield on your credit put spread, it's not going to be easy. Market makers are not idiots. They're not going to give you an easy 40% win. There's going to be drama. Okay. The high implied volatility explains some of it. Not that much. 60 is not very high for such a stock. It's the price of the stock combined with the high volatility combined with a high VIX price. Yes, that explains it, Bill. Yeah, in general. So we'll get to explaining the implied volatility in a second. So I don't want to overwhelm with information. This is not like a from A to Z. This is like, hey, let me show you about options and why you should be doing them. So the numbers that are available on Tesla and Amazon, for example, on this type of trading, if somebody has a big enough account, easiest trades on the planet. Unfortunately, you need a big account for that if you just want to sell naked puts on such big tickers. And I'm talking like plus or minus 40% ranges, easy wins. But there are ways you can make it into a spread to where any account can do it. But you need a lot of homework. You need a lot of due diligence and system. Like you can't wing it. I share 8 to 10 iron condors every week. I opted out this week because I didn't want to put anybody in harm's way with this volatility. They win most times. Every once in a while, they create drama. Like when we had the short week, what was it? Thanksgiving. I said, hey, I won't sell anything in Thanksgiving. In my years of doing this, every short week brought drama. I don't want to be a seller because we get blindsided, especially on Thanksgiving, because the world continues to trade. The futures are open. We're at a disadvantage. So where's that advantage of having one less day? We don't have one less day. We think we do, but we don't. How to morph. I'm not sure what morph means. With the selling the iron condors is basically taking two trades that are opposing. So they balance each other out. I'm bullish and I'm bearish. If you're interested in what it looks like, I'll show you visually. I'm not recommending this, please. So don't take this trade and say Nick said it's okay. So a credit put spread, where is the put? There's one. So a credit put spread is this side. It's a bullish position. It wins when price does not come to or fall below 250. A credit call spread is exactly the opposite statement. This one, bearish. You win if price does not go at or through 315. Now, this is not a trade alert. These are not the parameters I would take. Remember I said there is no easy win? If I collect 275 on a $5 wide spread, nobody's going to pay me that kind of reward when it's an easy bet. What I would do with this one, I would at max collect $1 total, because then I know I have an 85% chance on either side. Well, something's wrong with this. This looks pretty high. Anyway, so that's the logic. If you're humble enough, take 50 cents up here, 50 cents down here. You collect a total of 1. And then my maximum risk is 4. And I have 85% chance of winning on either side. So that's the kind of snoozer trade I like. And the yield is 25%. Yield is 25% in 45 days with 85% certainty on both ends. Sign me up. That's the kind of, not this particular trade. This is not from 25. This is too close, way too close to current price, way too close. Look, $23 in one day. So that's another big day and you're up here. So that's not a good one. I'm just putting it for visual representation. An iron condor is a bullish position and a bearish position. So on one good day, on an up day, this one loses, this one wins. On a down day, the vice versa situation happens. So it's self-hedged to a degree, self-balance. Okay, let's see. We defined puts, we defined calls, we showed how you can use them, we showed what not to do. We defined delta, your odds maker. So implied volatility, somebody mentioned it. It's basically how nervous are people. This is too high. Normally it should be 30, 20 to 30, depends on the type of stock. Some stocks run hot, so to speak. Like if I go to GME, it's probably 120. I don't know. We'll check in a second. So what are these two things? So what's open interest? What's volume? Okay. So open interest is the current positions that were open when we opened the market today. So whatever happened yesterday, there were positions already in calls and puts, and that was them. This is a static number, does not change throughout the day. When we opened, they were all zeros on volume. All these were zeros, like this one. Like today, nothing happened on the 235 call. There were no calls transacted. But this is what happened today. So tomorrow, at the open, these click back to zeros, and then they will change these numbers to net out what happened today. So we'll have a new set of numbers all day stuck and starting from zero here. So volume is what's happening today. Open interest is what was there before the day started. So that is these two columns. I don't have bid or ask. Why do I care? I don't. I only deal with relatively liquid companies. And if I go to buy a call, it's going to fill between bid and ask. The bid is 23.40. The ask is 24.50. The mid or the mark, depends on the platform. They call it mid or mark. The middle between the two is where it's going to fill plus or minus a few pennies. So who cares what the bid is for? Who cares what the ask is for? I'm not doing tiny companies who have some companies have big, wide, like I don't trade Shopify, great company, a huge stock, but I can't get a clean quote or clean fill on a spread. Forget about it. The single legs are way too expensive for anybody to toy around with, unless you're trading them like a futures contract, like in and out, minute to minute. So I stay away from Ulta, Lulu, Peloton to a degree because of these reasons. Personally, I stay away from Walmart, even though I can chart it like you and believe, but I just never find enough premium. I stay away from the DIA, from selling premium in it, because it's always underpriced. It seems like it's never wide enough. It doesn't give me enough premium, and it always moves against me. So I'd rather be buying premiums in DIA on trades. So it's a whole mentality. You have to adapt, and immediately you will start seeing repetitive things come out of my mouth. Usually this, usually that, and it just repeats and repeats, which is good, because first it sounds like it's all foreign languages to you, but then you start getting used to it. And oh yeah, I know what this is. I know what low day is. I know what volume profile is. I know what point of control is. Ooh, he's talking about charts. Let's go do charts. I guess the pre-workout thing is working because I feel like I'm on crack right now. Okay. So
What?
Well, I don't know if you take pre-workout, they put niacin in it and you get tingly and it itchy skin and stuff. So like it's kicking in right now. I've been drinking it.
The pre-workouts?
The pre-workout stuff. Yeah. Because it's designed to make you sweat at the gym. And I'm drinking it here because I'm out of an energy drink.
For what you're doing in the chat room, man, like from early morning till late night. Like, I mean, you I don't know what it is, but you know, it's working for the chat members.
Yeah. So, okay, let's talk charts. We're going to do a fun one, SDC. So there was actually, hold on, we'll get to it. There are some people before you that had tickers. It was Baba, Neo. What was the third one?
Rodishola is asking.
Pins.
Rodishola Nick is asking, are young traders with small accounts welcome in the chat room? I think you could take that one.
Yes, if you're willing to learn good habits, absolutely. If you're in there YOLO trading left and right, I mean, I'll try to steer you straight. But if you're in there to learn something that you can hone across, I wish I was I'm 54 right now. I've been trading for a long time, but I wish I was like my son is 20. I wish I was his age, because really the opportunities are pretty phenomenal.
Like, wouldn't you would have wanted like to have a, decade old mentor show you the ropes? Like when I started, there was no Nic Chahine chat room. It's just pump and dump chat rooms, and we've all been sucked into that. And I'm just, very, very happy that Nick and Benzinga is able to bring this to you guys, because this is not, there's a lot of shows out there, but to be honest, Nick is straight to the point. He doesn't, sugarcoat anything. He definitely cares for the users.
Yep. So my goal is to get people out of being just joining the herd. I want you to think for yourself. I want you to see opportunities that others don't. I want you to avoid the obvious mistakes. And we'll go to Lucid and I'll explain to it in a second. Is the a large account chat? I don't know what that means.
He's asking if we have a chat for large accounts. No, it's all the same chat. Yeah.
I have, if trust me, you're probably not the biggest whale in there. I know everybody thinks their account is biggest. I had a conversation with somebody yesterday that says, I manage X dollars and my jaw dropped. It's like, oh, okay. So you and I need to have a different conversation then. So clearly, okay. So regardless of how you trade, when you trade, it's got to be the same. What will I learn from joining? What do you want to learn? Yeah, the other person had 9 figures too. So what would you want to learn? Put it in here. Scaling up my small account. Scaling up. Scaling up meaning have profits to grow the account. I can teach you knowledge on how to do it. I can share my setups. And if you take them responsibly, you should have small wins along the way. The goal for me is to have base hits, consistent, responsible base hits. Dating, you share your thoughts. Okay, so I'm going to throw a curveball. These are new. I'm testing a new product. These are not my systems. So I forgot to turn them off, and I don't want to go in there and turn them off. I don't want to show the name of them. So I literally have only one study on my chart, and it's these guys right here. My primary tool are my eyeballs, and I find levels. Like right now, I can tell you there are 2 levels that stick out like a sore thumb. Can anybody name them? There are 2 numbers. I'll give you a $5 give or take, because it's hard to eyeball something. 140 matters, but not from an actual price perspective. From a level perspective, yes. 210. Close. 210 is close. Adjust your number, Yvette. It's right there on the screen for you. 217. No, it's right there. 213. Ding, 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 ding. That's one. 213 is one. It's right there. This is the highest point of volume. It's written. That line is not mine. It's right there. And the second highest are these 2 bars. So you got 160 to 165. In between, there's hardly any volume. Below, there's hardly any volume. So what does that mean? It means when this price reaches that area, it's going to find congestion. As soon as it fills this gap, it's going to hit a brick wall, and it's going to go boom and then fade. And the goal is to not make regress too much and come back. Because if they can clear that, they not only clear this level and this one, they also go into a vacuum hole, black hole that goes whoop. That's what happened today with the IWM, with the ES, with the S&P as it faded quickly. They fell into a volume black hole intraday. Well, there is volume, but compared to these 2 mountains, there's a just giant, that's like, there's hardly anything. I don't use any squeeze indicators. What you see is what you get, I promise. These 4 lines come with those arrows. Maybe I can take them off. Here, I'll take them off. I don't care. I'll take them off. I just didn't want to put their name out there. So this is my usual chart right there. This is my eyeballs find the levels. I draw the lines by hand and I make comments. And you spoke about Baba. Baba is dirt cheap. That doesn't matter. Baba is in the hands of the sellers, hence the descending channel. I gave up on trying to catch the falling knife. And 2 days ago, I said, I am doing my last effort on Baba. I said, I literally spent $100 to just relieve the itch and just throw it away. I don't want anything to do with it. Once the Chinese headlines will go away, then I'll get back into it and trade it with intelligence without having Chinese headlines. So I'm green with that. I have leftover K-Web trades that are back to flattish. And so Baba has fundamentals on its side, has value on its side, has tremendous scars to go through. Biggest one, that was the last chance. I believe this is the biggest hurdle they have right now from a level perspective. This gap is enticing, but man, it's going to be tough. Getting to here and getting to here is going to be 2 different things. And then 1 level at a time. My guess, Alibaba should have a headline that makes it go and just ignore all this. Otherwise, it's going to take a lot of toughness. So hopefully it comes out with a headline of something. China saying, we've struck a deal with Alibaba. We're done beating up on it. Then good job. So that's Alibaba for you. Technically broken. The stock is not broken. And I don't think the delisting is going to extend to Baba, but the risk is there. I did say Baidu was acting better because it was actually trying to hold the bottom, and then it too gave up the ghost. These 3, I said, hey, it's actually making some progress, and then 2 days later, the delisting news for Didi came back, but now it's back to where it was. So Baidu is behaving better, and I thought Baidu will do this, and it could still do that. So those who bought the bottom in Baidu that I suggested are still okay. So if they sold a put, they didn't get shaken out because they wanted to own shares. If they sold a put to buy a call, they're still not in danger because my call recommendations were out in time and the VIX was not this high. So they're okay. K-Web would represent a blanket on all of these. Now you asked about pins. Pins is also falling precipitously and for weird reasons. And when it got to here, I said, you want to avoid this. I believe I put that on the chart. Let me see. Needs to avoid this. So I said, are they drawing the right shoulder? I mean, could it possibly be after all that debacle? And sure enough, they did. And that was my target. And that came pretty close. So I said, if I take a long here with pins, I would stop out fast and retry lower. And they bounced. So let's see if the bounce holds. You are using horizontal bar graphs. I use these as a secondary level of information. Where's the next level of pin? So let's go. Are you short term or longer term? So from a level perspective, this is going to be a tough jaunt. So if you think about it, they fell from here to here. This is about halfway. So if you're a Fibonacci person, this is where there's going to be some sellers lurking. I can tell you right here, this is where the machines start selling it because the machines are still assuming that it's in the bearish downside trend. Therefore, the bots will start selling it. You guys call it algos. You call me when it's not an algo because 80% of the trading is algos. So if there's a human that overrides the algos, that's when you should note it. Otherwise, assume that machines are trading the stock. So look, on a short-term basis, this is a 2-hour candle. This is where I expect sellers to be lurking here, stronger up here in that jaunt. Level-wise, that was the cliff. So when they get there, volume-wise, for this period of time, that's the highest point of interest. So there's going to be a slog there. So makes sense. Look, watch it. So from a regression line, the channel looks like this, right? And they're ping-ponging from edge to edge to edge to edge. So onus is on the bulls when they get to here to not do this. Do this a little bit, come back, challenge the tough level and break out from it in a cup and handle of sort and snap out of this descending freaking nightmare for people. Okay, so Pins, Baba, Neo. Boy, I was enjoying Neo comments because it was doing exactly what I thought it would do. This was happening. I drew this before the dip. It dipped and came back, and then the DD. It was a bargain for somebody that wanted to buy it if they weren't going to delist it. It was a bargain that somebody that sold puts. So I said, support zone, but if lost, it could go lower. They went halfway. But if I look left, that's about the same place where I would expect them to try to buy it. Look at that little jaunt right there. So the bad news is it's not set in stone. They're fighting for this neckline. It is crucial for Neo to recover this and close solidly above it, especially for the end of the week. Otherwise, I call it ladybug. It's well, in this case, it's actually some sort of a neckline, not a head and shoulders, but when the stock does this, comes back to a neckline and does this, doesn't go as far as the primary time, and then loses said neckline, then it becomes like an inverse cup and handle. It's a neckline that's been lost, and the bears will overwhelm the bulls, and the downside measured move is usually as big as the neckline, but in this case, it's like a falling, it's like a flag that went sour. So you don't want to test that thesis. That's why you need to recover that. They have good sales. I agree. I agree. SDC, got you. SDC, what is this? Smile Direct. Wow. Ouch. Are they a Chinese company?
Nick, really
No,
quick
Nashville.
question.
Yeah.
Quick question here. So I think Didi's in the process to delist. How would you trade that? Or would you not even trade it at all?
I wouldn't.
Right?
I wouldn't. The only way is if
Like
it
on
was
the
a
downside.
rumor. If it was a rumor they were going to delist, I'll take a flyer on it. But I took a flyer on Luck and Coffee after it crashed, and after the not after the delisting, after it crashed, it was like a 50-cent call. I can't remember how much it was, and then it delisted, and it's
So, like,
gone.
Didi is like actually in the process, like officially.
Right?
in the
No,
process,
that's what I'm
right?
saying. If it was
Yeah.
a rumor, I may trade that, saying no, the rumor might be false, and then it go to the moon. But they said they are delisting. I think they have a vote on it. They need to get the vote. Like if the shareholder vote goes against it, they don't delist. So you can trade that, a lottery ticket. So if you want to spend extra $100 or whatever it takes to, I haven't looked at Didi. So do they still have options open? Are they allowing them to do that? What if the vote goes? What if the shareholder said no? So this is where that's called arbitrage. So look at all these thousands of calls that are already there, 23,000 contracts, 28,000 contracts. And you can go in there and see when they, I will do that. I promise, Ashley. I didn't do another ticker. We're talking a trade on like a delisting thing. I'm not discussing the chart. It's ridiculous to discuss the chart. It either flies or not. So, it's 50 cents for 45 days. So find out when the vote is. Buy a call that could be between now and then. 74 cents for 750. What is it now? 720. So it's right there at the money. So if I buy one, that's the maximum I could lose is $74. And if it flies to the moon, this $74 could be $5. I don't know how far it goes. So it's literally a lottery ticket. If you want to pay $8, that's the one. But this is like really smoking. I mean, you want it to double before you can make some money. Anyway, so we promised SDC. Well, there's nothing much you can say from the chart because it's a new low, and this is on a weekly basis. So what you really want to happen, so every candle is 1 week. Clearly, we still have 3 days on this one. Last week, it opened here, it closed here. This week, it's doing better. So what you want is make as much progress against prior weeks as you can. That has happened before. One green candle doesn't guarantee you a bottom. The first sign of a bottom, the bottom is a process, not a V-shaped recovery. And the first step is to stop making lower lows. So it's okay to continue making lower highs, but what you want is, because now you're in a descending channel, if you stop making lower lows, then and you still make lower highs, that's fine, because then the range goes from here and it tightens and it tightens, and then you come to blows at some point, and you pop. But meanwhile, you're making progress with your higher lows, and then you build a channel that starts the recovery process. So it should be like this type of a shape. These V's are no good. So this is on a weekly basis. Let's go down to a daily basis to see if we can help you out any further. Not much to be said more than that. It's 2 green candles among a sea of red. So levels wise, this candle matters. $4 matters. Clearly, this gap is not going to be easy to start. So if you're buying it for the gap, you're making a mistake. You take it one step at a time first. Let's go to 2-hour candle. See if we have more intelligence. 1-hour candle. 3.4 is a bogey they have to deal with. You want to maintain. Remember, I told you start making progress. This is on a lower time frame. So you want to maintain that progress. It's not a trend line. Don't connect the dots. You just want the process of higher lows. You don't care where it is. You can connect any 2 dots and say whatever you want to say. This is an important line. So is this one. So what you want is progress against prior levels and mini pop right here. So now this looks like a mini cup and handle, which gets you to about here, but you have to deal with these 2. So you take them one step at a time. Progress. That's what you want to see on a 1-hour candle. That'll suit you. Good enough? Zoom and Lucid. So Zoom, I said, I used Zoom to trade the market. The fear when we had the crash last week, I said 2 things. I don't know what the news said was reason, but I read the headlines. It was fear of rate hikes. Bullshit. It wasn't. The bond market broke out. That's the opposite of rate hikes, because I know they're not rates, but they deliver yield. And if the bond market is spiking, yields are crashing. So that's not a rate hike. Second, a fear of the virus. Bullshit number 2, because if it was, why isn't Zoom popping? Why isn't Netflix popping? Why isn't Peloton popping? Why isn't Teladoc popping? They all fell more than the stock market. So there was something else at play. My vote is it was tax shenanigans from big money managers like BlackRock and Vanguard. Those guys manage trillions of dollars. And that's probably behind the scenes is what's happened. They buy calls, they drive the conversation up to calls, then they buy puts, and they scare the shit out of people, excuse my French. And then people rush into puts on Friday, they get out of their puts, and now they're back into a fresh setup for next year. Those guys are passive money. They set up their trades and they use the indices most likely to like steer the ship, like bumper stops and bowling. So I don't know enough about the process. I know enough to know that this could happen and somebody was feeding us a lie. Anyway.
Quick question there. Sorry. Thomas asking if the discounts apply every year. Yes, it does. It's a permanent lifetime renewal. So, and Ashley, if you have questions on the setups, if you want to trade something different, like an iron condor or whatever, Nick gives you that, whatever it is that you're trying to trade, show you and all that.
Right. So Zoom's first problem was here. First problem was this. And the fact that it's bleeding it slowly is good news. So if you look at the fundamentals of Zoom, the drop on the earnings was ridiculous. They grew sales tremendously. Oh, but they missed estimates. Who cares? Estimates is somebody's opinion. For all I know, they're idiots and they set the wrong goal. I go with facts. The goal of any business, if you own a pizza shop, your goal is to make more money this year than last year. They made more money this year than last year, and last year was phenomenal. So that's growth. So that's fact number 1. It was a false pretense drop, and I went long. I said we should go long, and it popped, and then this happened on the virus. So now let's talk levels. The scary part, it triggered so many bearish patterns that have more downside to go. But I don't know which ones they're after. Are they after this one? because this is a massive head and shoulder type of a thing that says, okay, it's going to 50 type of a deal. But then against it, this is a super strong support. Look at the volume bars. There's a lot of interest here. So right here, there's a ton of buyers lurking. And there's going to be resistance all over the place. Here, 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 definitely here. So big picture, the way I would trade Zoom on this drop is I would sell a put to own shares. And on a day where the VIX was up 50% and Zoom was down 6%, boy, were the puts hot, hot, hot. So if you wanted to own Zoom at 140, somebody would have paid you yesterday over $4 for that at 140. So wait, yeah, that's through February. That confused me because we jumped dates. So through January, it's a little bit less because there's less time on the clock. You can do it through December and go higher. So if you're willing to own it at 165 or sell a put spread here, you'd still have a decent odds of success. So Zoom, long-term, if the markets are higher, it will be higher too. We're going to be driving less. We're Zooming more. I use it every week. My family uses it for everything. I bet yours does too. Okay, so another one like that where it didn't make sense how it ran, UPST. I didn't know much about the company. Somebody from the chat room says, hey, what about UPST? I said, well, tell me a little bit more about it. And I did some homework. I was like, dang, that's a good model. Guess where the price was when I went long? Okay, so I wrote up here's the logic for it. It was somewhere in here. And I said, what? This stock runs like Roku and suddenly it's stuck like for a long time. I said, something's happening. So I wrote up a trade and I said, that's the breakout line. So I did a credit put spread option or sold put to own shares inside that wet box, a call option or a debit call spread option. So that's a bullish position. This one, you collect money to be long. This one, you pay a little bit to be long. If you did both, you're basically long for very little money out of pocket. And then this happened. Like, whoa. So I shorted it when it got somewhere in here. I ruined my own trade because I did not anticipate they would go here, but then they gave it all back. So I was fine, but it was just undue drama for me because I did the right thing and then it went. So we find setups like these. And if I have conviction and if the fundamentals make sense, I mean, look at the P&L and the stock was stuck. I was like, wait, there's something missing. And then of course, this is not correct. Whoever did this, why? Then they did this head and shoulders up here-ish, and then they priced it out. Now it's falling into support. They said, should we go long again? I was like, I am not going long. In theory, you could, because A, there's still a gap down here, and B, I could not explain this. So I feel like I'm missing a piece of that puzzle. So I'll put it on hold for a little bit. If it crashes down to here, I'll re-engage my same trade setup as before. Otherwise, personally, I'm not touching it. It is a catchable knife. Okay, I think I did those tickers. We did SDC, UPSD, Wish. I mean, what am I going to say about Wish? Just buy it and forget it. The calls are dirt cheap. Or buy the shares. It's $3. What was it today? $3. Yeah. Another one is Clover. Talk about a lottery ticket. Holy mackerel. PayPal, Mara, and DraftKings. So PayPal, yes, I love long-term. Google, no, not for me up here. Cisco, too boring. We'll check the stock in a second. Mara, pretty violent, so you better know what you're doing. DraftKings, today I suggested Penn. If I'm long DraftKings, I wouldn't do Penn. I did suggest DraftKings earlier. I don't remember when and how, but so DraftKings drew the right shoulder, like be watchful when I set up the trade. I said stop out number one, stop out number two on different. I've traded it more than one time, mostly with good results. Now, who doesn't have good results? Somebody that takes a trade. If I share a sold put spread, those most win. If I share a debit call, those have to be active traders because one day you're up big, and if you don't book your profits, you write it all the way down. So that's the person that says, oh, you lost. I took the trade and I lost. It's like, how could you have done that? At one point, it was up 30%. I mean, what do you book if you don't book 30%? So I always book early. I don't mind the stock rallying 100% past what I get out, because if I know that you can't take away the win from me, I'm totally okay. And a debit call spread, similar situation. If it doubled in price or it gave you $1 in profit off an investment of $1.50, I'm out. So some situations are different. Like I called GE from it was 7, same with Ford, maybe under 8. And then if somebody didn't, try to keep it, if those two were perfect example where if they kept it forever, then they made a crap ton of money. But I booked mine and I am not the least bit upset about leaving them early. Okay, so somebody's asking, do I do straddles and strangles? Are you selling the straddles or the strangles, or buying them? If you buy a straddle, your opponent is the market maker. You think you're better than them? Not me. So no, I do not. Somebody in the chat room today was long a strangle on MDB. They say they made money. The move was big enough that I believe them, but the amount of risk they took to beat the market maker was insane. Not my jam. Let me scroll down. I fell behind.
Nic, I just wanted to add something here, what you were mentioning, that it's important to have that education, that guidance from the beginning, because I know when I started, you just go to YouTube or you try learn as much as you can, and maybe you end up learning something incorrectly, like a lot of misinformation about options. See a lot of young people on TikTok and all that stuff. And I know that your approach is a lot different. You're all about consistency, not about the YOLO trades.
Definitely. So early today, part of this room where I said it was a new thing for me, this one, somebody was saying Tesla, Tesla. So I put up a poll. I said, do you want me to replace the RUT, this one, with Tesla chart? It was 60-40. It was too close to change. So I created a Tesla window to share. And the comments were right here, these drawings. So I said, I would love to see it fade and come back and test a level where I think it will find sellers and fade and then break out. So, or fail inside here. So I said, this is where the action is going to be. And look at where it closed inside my circle. I moved it out to the right, and then the day unfolded, and I didn't revisit it. So if somebody was paying attention, they know exactly what's in play for Tesla. This is a 15-minute chart. Tesla overall, if you're still trying to short Tesla because it's expensive, then you should revisit its fundamentals. Trust me, I am not a fan of Tesla. In fact, I'm the idiot that thought it was going to go bye-bye. So as soon as I saw a change, one particular thing change on the P&L, not the P&L, the outlook. So this box right here, this is cash flow from its own operations, $6 billion. That is not a company that's going away anywhere anytime soon. Did you read the comments from Elon Musk? He's calling to take away the tax advantages. He said, we don't need tax advantages, spend infrastructure money on gas stations for electric cars. So this is a guy who's confident of his financial position in the company. So stop shorting it, because that's what the quote experts you like on TV tell you to do. It's a losing cause. Buy the dips. You'll be a happier person. Trade the dips. Trade the dips. I don't own shares. I only trade it on the long side when I see a fall into support. So if you want to short Tesla, short this trigger right there. Then you have an inverse cup handle that could give you 840 with a lot of support in between. So if you short Tesla, that happened yesterday to somebody in the chat room. They came to me, boy, I wish I had gotten out. I had $2,000 in profits. And so I helped him trying to maneuver his way out of that short. So because he didn't book his profits. So if you short Tesla and you get a quick 10, 15%, book it, especially if you have a lot of money invested in it. So the bulls are in charge of the stock, whether you love it or not. If you hate the stock, don't hate the stock price action. Just trade it, profit from it. That's how you stick it, give it the finger, profit from it. Okay, so 1 hour charts, you got a high, you got a low, and somewhere in the middle lies the truth. This is a cluster of resistance. This is where machines start selling it. If it goes above this one, get out from your short, because it's probably going to here. If it loses this one, you can short it down to here, but I would book profit somewhere around 910, 915. It will find buyers there. So that's Tesla. Lucid. So I think Lucid as an investment is not ideal up here. I'm not going to go into it. It'll upset a lot of people. Somebody said it was great today. What was great about it? You must have traded the action. Anyway, maybe I misread it.
Are you talking about George at the beginning?
I don't know. Somebody made a comment. I thought I read it was great. It was great. So, okay. So my logic on Lucid, they say it's a Tesla killer. I was like, it's an insult to Tesla that you actually say that. So first, if there's a champion, the challengers have to challenge the challengers that are higher ranked than them. Lucid full capacity, last time I read, you can correct me if I'm wrong, is 34,000 cars a year. High capacity, the full capacity. Currently, NIO produces probably 60,000, maybe 55. So it's not even halfway through to the next strongest company behind Tesla out of the new guys. Besides, they don't need to worry about Tesla. The people that are going to fill the EV gap are the legacy car companies, VW, GM, and Ford. They already have the infrastructures. And you want my guess on EVs? Okay, I'm going to make a wild guess here, piss off a lot of people. EVs will not replace the internal combustion engine unless we have a major discovery in batteries, because the math doesn't allow for it. I'm going to give you a sobering number. We produce the world 80 to 90 million vehicles a year. Actually, it's more. Last year, they did 80 million, and that was the pandemic year. Let's say 80 million. We don't have batteries. We can't possibly have batteries to fuel 80 million new vehicles if they're all going to be EVs. Therefore, there needs to be a hybrid source that bridges the gap. Or we have a completely aha moment on batteries. And the landfills on batteries will be wow. So technically, Lucid right here, inverse head and shoulders, probably complex head and shoulders, 2 shoulders, 1 head, 2 shoulders. Once it broke out of here, the target was immediately from 28 to 16. So $12 from here. That was the measured move based on that alone. So $12, so 40. Coincidence that it's fighting for 40? No. Pay attention to this candle right there. Look at how fantastic. Here's a lesson about doji candles. This candle, you don't see these candles often. This one right there. This one says, right there, on that day, February 23rd, they opened right here. At one point in time, I hate it. I freaking hate it. Sell, sell, sell. No, wait, I love it. Buy it, buy it, buy it. And no, I have no idea. Let's just close it exactly where we opened it. They closed it a hair above it. So they set a range that was phenomenal. The low was 30. The high was 40 something, 44. If you draw a box around it and go sideways with that box. Come on, Nick. There we go. So the upper end of the box is right here, where today. And the lower end, the middle of the box is right here in this cluster. The lower end of the box is the breakout from here. That is your guiding light right there. I have a feeling that you can buy Lucid in the next 6 months below 32, but I wouldn't short it. But if I'm going long, all in right here, I should do half order just in case Nick's right. Just in case. The car is beautiful. The tech is amazing. The car is too expensive. It is the 1%er's car. The starting price is 80 grand or higher. The one they advertise with 500-mile range or whatever it is actually 150,000, 130 to 170. So it's not for everybody, but it is absolutely phenomenal. So if they get a model that's, say, 50,000, then okay, we're playing on even footing. But then they still have to do the capacity thing. So investment, Lucid, I wouldn't go all in. Rivian, similar concept. I live in Southern California. If you drive around Newport Beach, you will you will see Rivians on the streets. They're pretty impressive. You'll say, hey, what the hell was that? So I love the car. I haven't invested long. And if I did, I would sell the naked put to own shares way below current price. All right, Rivian, Facebook is range bound. I would sell an Iron Condor meanwhile. Same with Amazon. Used car sales. Hey, you're speaking actually, you and me are on the same page. I would short NIO? No, heck no. Why? No. Let me see here. Did I miss any? Oh, by the way, you see this, how we're let's see here, doing this fast fire thing, how you're hungry for charts. You're excited for me to pick up your chart. You have this all day, every day, all year. How much is that worth? That's your selling point right there. Clover, yes, I would buy a call or shares and own them for a while, George. Okay, that was a good deal on Unity. So Unity fell into support, pivot zone. The only scariest thing about these stocks is that they're so much higher than their pre-COVID, not the pre-COVID level, the whole sector. Like the pre-COVID level is like way below here, and they're still so high. But from this perspective, this is a weekly chart. The bulls are in charge. This was wrong. They fixed the wrong. So the bulls are in charge, fell into support. The machines should buy it here. It is a pivotal zone. It was a prior pivot before. I like it for a trade, but I would not go all in. There are sellers at and into 160. So be careful of that. If you want more granular. So this is 15-minute charts. This is, look, big resistance of volume up here. So 160 is right there. Higher lows, that's good. So that's your bogey tomorrow, 157 and 158.5. So clear those, you might get a bump, and then higher low progress to tackle all these tough levels I mentioned. I like it, but look, it's in the hands of the seller. It depends on what time frame you're looking at. That's Unity. Yum, Roblox I gave up on. I like the concept, I just gave up on it. Riot. So if you're trading Riot for crypto, just trade crypto. It's a good base. Stop out immediately below Monday's low. So here's a lesson on crypto. I learned it last night. I told you, I lost about $400, not because I traded something wrong. So I use crypto.com to trade crypto. So they tell you, if you don't have your own wallet, then you really don't own the coins, because you think you own the coins, but they're living on somebody else's website. So get your own wallet. So I went and got a cold wallet, not a cold wallet, a DeFi wallet, which is a decentralized finance wallet, DEFI. So basically, it doesn't even have a name attached to it. They don't need it, but they give you, like, no human runs that. So if you lose your password sequence words, you will lose everything in it. So those stories like, oh shit, I can't get back into my account, they're real, because it's not a password reset. Help me get my password back. Help me get my account back. And the only way you could is, speaking of which, I'm having a hot flash. Where's mine? So they give you a set of 20 words in sequence that you have to type in to recover that account. So you lose that, you're out of it. Nobody runs it. It's decentralized. It's free to do whatever the hell it wants. There's no like customer rep on the other end. They could help you reset your account. Okay. So here's the mistake I did. So I've been staking coins for a while at 10%, and it's a stable coin. It's USDC or US. The one for Tether is with a T, and USDC is also tracks the dollar. So I saw, and the way I stake it is, no, that's the one that killed me now, Bill. Hold on for a second. USDC is the one I've been using, 10% solid, no issues. You lock them for 3 months at a time. They'll give you a yearly rate of 10%. Solid, right? So the only risk is if company folds, then you're out the money. But hey, guess what? It's a trade that guarantees me 10% unless the company folds. Sweet. So I'll do it, right? The CRO is not pegged. The CRO moves. I didn't want that. I wanted a pegged currency, and that was it, USDC. So I went to this DeFi wallet. I said, can I stake my coin there? I looked and I found the true US dollar, the TUSD. They're staking 20%. I was like, holy crap, that's twice as much as I get. Let me send some money there, right? So I went and bought TUSD from my crypto platform and I sent it there. It cost me like $27 to send it, which is fine. I sent $2,000. Okay. So I got there. I was like, cool, let's stake this bad boy. And I said, stake it. It says you don't have enough Ethereum to stake it. It's like, wait, what? I didn't need Ethereum to stake it on crypto.com. So they said you need Ethereum. They don't tell you how much. Well, I stake it on crypto.com and there's no cost for staking. They just stake it and there's like a little fraction. So that says you don't have enough. I was like, can you please tell me how much I need so I can get you? No, they don't tell you. Okay, so can I sell some of my coins to buy Ethereum? No. Can I send my coins back? No, I don't have enough Ethereum in that account to send it. Okay, how much do I need? Oh, there's no telling. So you go to see the meter on crypto and it says, maybe it says 0.015. So that's like $300, give or take, to send my coins back to where they came from. It is absolutely crazy. And here's the killer. I have to go buy 0.015 Ethereum, send it, which is going to cost me $27. Hope it's enough. If it's not enough, I have to do it again. But if I do too much, that coin that's left over in that DeFi wallet is going to live there forever. So it's like going to opening an account and leaving like, I don't know, $100 in it and not being able to do anything. Crazy shit. So I was like, you know what? Yeah. Lesson learned. It's going to cost me like $400 to go back to square one and continue doing what I've been doing, which is staking 10%. Beautiful. So I'm good playing with crypto.com. I've given up on the DeFi wallet unless I want to store coin for the long term. And the coin I would pick is Solana. You know why? Because Ethereum needs to die. The cost and the slow sluggishness of Ethereum is the reason why Solana should go to the moon. That's my opinion. And Ethereum cannot go higher than this, because if it does, nobody can trade crypto and move it around and stake and whatever else it is. What is that called? Something farming, yield farming. You can't do that stuff because the gas fees are astronomical. So if the gas fee is 0.014 and Ethereum goes to 5,000 or 7,000, that fee becomes like, if I wanted to stake 20% of that money, I would have lost money. Even if I'm earning 20%, I'm losing on that transaction because they expire every 3 months. I have to pay $300 every 3 months. And if Ethereum goes up, that $300 is $600. No, thank you. Ethereum needs to die. Whew. Okay. All right. So what's the time limit on this bad boy, Rodrigo?
So just to clarify, everybody, Nic does, he dibbles with crypto as well, not just an options guy, obviously.
Yeah, I didn't mean it that it needs to die. It needs to not be the default cost for everything. Solana, I believe, is 3,000 times faster.
Mm-hmm.
So I don't know how many times, but it's in the thousands.
Yeah. Since you told me last time, I did a little bit of research and, like, keep in mind, like Ethereum and Bitcoin, they were the first players, but just like you have GM and other companies that were the first players, they don't always end up, at the top.
Yeah. So I bought Solana here and I booked my 32% or whatever when it jumped to 192. And then it did this. I'm looking to get back in. So I have alerts in my platform. I'll do it here too. Hell, why not? To get back in. Just because it is a contender against Bitcoin. I thought ADA was it, but almost like ADA USD, it almost like it had its shot. But ADA is a good starting point. I think the last time I bought it close to one, I made money. I should put an alert here so it reminds me tomorrow anyway. Actually, maybe I'll take another shot. I use crypto.com just because I started there. It's not a great platform. It's crude. Sometimes the button don't show up on the screen. They make it a little too big. It just, yeah, CRO, you can stake any coin. Staking is basically you're locking your coin so they can use it as collateral to get their proof of stake happening. So when you send a transaction, it goes across freeways. The people that maintain the freeways need the funds to actually make that stuff happen, and your funds go toward that. And in reward, they give you a piece of the gas fees and all of that. So that's the easy way to think about staking. It's basically like putting money in a CD and you lock it. Therefore, they reward you for giving them the money. The bank can take your money and lend it somewhere else and put it to work and earn interest higher than what they're paying you. Well, they all pay coins on everything. You just got to know that you're set up right. That's all there is to it. And I opened an account with an overseas one, Qcoin. So yesterday it was like midnight. I'm trying to log in. The platform, somebody on crack designed it. I mean, what the actual heck is going on? It has like 4 different pages. It's like, yes, they have futures. They have bets too. But I needed to go log in. I couldn't log in. I know my password. I'm 1000% certain of my password. So I was like, okay, I'll change my password. So I go in, let me change my password. They send me the code. I put the code. You got to slide the picture to match the code. Can't log in. It goes nowhere. So I sent them an email last night and they answered just now. So I need to go check it out. So crypto is very exciting. It is the Wild West. So you got to learn your lessons. Hopefully you learned from me today, not to go stake without knowing the gas fees and to see if you have enough Ethereum in that account to stake. Inside crypto.com, I have not been asked to have Ethereum. I just say stake it, how much you want to stake. There's a minimum of 250. All right, I'll do X. Perfect. It lives there for 3 months. They'll show you daily how much you're earning. After 3 months, the money is free. You can restake it. Beautiful. Easy peasy. That's inside crypto.com. But I downloaded the crypto.com DeFinance wallet, which is a separate app, completely separate from your trading account. This is a DeFinance wallet where you put your stuff in it, your coins from other places. You can transfer them there. You can fund it. And so I went to stake it inside that account. Capiche. Yeah, it holds NFTs too. Staking, I just described it. To rewind the review, I mean, it's basically earning interest. You're lending money to the bank, and they reward you for it. It's very rewarding for now. All right, let's put a time limit. I have a few things I got to go do. Let's do 3 more tickers. Give me 3 tickers, and then I have to leave. Beyond Meat, Michelle, I'll do that. Square, I'll do that. K-Web already spoke about it. Ford, too high. Palantir, I'll do that. Beyond Meat, Square, and Palantir. DWAC, I'm curious where it's at now. Whoop. About the same. Okay, so Square. I would go along Square. I would go along any transactor right now. SoFi at the top of the list, Square down here, PayPal, Visa and MasterCard. Not all, pick one you like, or spread the risk between the two. If you like 2, don't go full bore on 2, go halfsies. They can fall some more, but this is not an obvious mistake. This is. Even this. Here, it's the opposite of an obvious mistake. Okay, so I condone going long. How? I would sell a put to own shares. I would sell a put spread to create income from the opportunity of owning shares. I would buy a call spread out in time, $10 wide, costing about $3, 3.4. So I have the opportunity to turn $300 into $1,000 per contract. Give it time. When you buy a spread, it costs the same if it's close to current price, whether I put it for 1 week, 1 day, or 3 months or a year. It's always about half the price or thereabouts. Talk about how you know the company fundamentals. Okay, so let's go to Square. They're saying, how do I know about company fundamentals? I pull up a report. I go to the income statement. Are they growing? 850, 1.3, 1.8, 2.2, 3.3, 4.7. You get the idea? Right now, their trailing 12 months revenues, sales, is 17 billion, which is almost double last year. Did they buy somebody? God dang. It's quadruple, triple the year before that, and so on. The rate of expansion is accelerating. So they know how to grow business, and they're no longer losing money. So let's see how expensive or cheap they are. Oh my God, PE, who cares? When a company is growing that fast, the PE is the wrong metric to use. This is appropriate for Walmart, appropriate for a bank. Maybe price to book for a bank is better. But for a company that grows fast, for Amazon, it's never been appropriate to check its PE. You check its price to sales. Even though the stock price is high, the price to sales is half what it was last year, and lower than 2 years ago, lower than 3 years ago, lower than 4 years ago. So why? That means the growth of the company is keeping up with the stock price acceleration. So here's the way I would word it. So if you're buying Square today, you're giving it 5 years worth of credit of total sales. So, which is not a lot. Amazon is lower. Apple is higher. Tesla is 4 times higher, at least. Zoom, at its height last year, it was 125 years, and now it's 20. So Zoom is cheap relative to what it was. So this is not an expensive company. It's a bargain. At this growth rate, you get only 5 times sales. Phew. Yes, good job. Okay, I forgot what the other tickers were. Palantir. Palantir, same sales story as this one, Square, but young. Anytime under 20 has been a bargain. I've sold puts in this one. I sold puts in this one. I would sell puts in this one. They are in basically a user interface that allows companies use their data intelligently and make decisions on the fly with all the data that we collect. The whole world is going electronic, so there's going to be more data than ever. If this company allows you plug and play methods, set it up one time and use it all the time. If you've ever run a business, you want them on your side. They also work with the government, and they have an extremely fast growth rate, and they just got a new deal that accelerates it 25% for next year on a yearly basis. So there's no knocking it. The team is impressive. They sound great. They look great. If you lose 18, they can come down to 16, even 14, at which point I would close all other positions and dump it into this one for a long term and give it to my son. So good company, fallen on hard times because unfortunately it trades like a ARK stock. So there was an assault on ARK stocks recently. The IWM fell 2 times in 2 days, 5.5% in the matter of 8 hours. I've never seen this before, and nobody talks about it. The small caps corrected 13% from top to bottom. That's one full-blown correction in Wall Street terms and 1/3 of the way to a recession. What? Yeah. So Palantir goes almost tick for tick with that. Same with ARK. ARK stocks. Okay, so what was the third one? So wait. So Coolski, you need to be in the chat room. Sounds like you and I would have fun. Ocugen, I said something else. I said the third one. What was the third one? Help me out. PayPal, right? No, PayPal, we did Square. It's almost like PayPal. Ford, too high. Way too high. Beyond Meat. SPCE, buy it for the long term. You have my blessing. Well, buy it. Get long it for a long term. Shoot, I forgot. What? God damn. Beyond Meat. Thank you. I need another shot of pre-workout. Okay, so I don't like the product. I do like vegan food. I'm not vegan. I'm not a staunch meat eater. I like meat, but I don't crave meat. I can live the rest of my life without meat. What in the hell is happening here? So here, I was floored by the selling point during the pandemic. They can't produce meat, therefore Beyond Meat should be stock rallying. It's like, how is that right? Well, you can't produce meat. It was like, how can they produce non-meat? So it was that non-meat produced from before the pandemic and is sitting on the shelf for a long time. I didn't get that. So people who went after it for that purpose, besides, their clients were strictly restaurants and food resellers. So, and they all shut down. It's like, what are you guys chasing? And then the company said, we're switching to retail, and I still don't see it on the shelves. I think Costco carries it. It's never in my face. And I do shopping at Costco. So I don't see them in my face. I don't think they're doing a great job on either side. So management needs to refocus my attention, me, the proverbial me, into what they're doing right strategically. Now, technically, there are like 3 or 4 major bearish patterns that played out and are playing out. The last one is this one, and that one is scary as hell. The downside target of that one is, I'm not going to say it, it's well below this one, which I don't think it should go there. Therefore, the improbable, that scenario, makes it a decent bet upside from here for the long term, or swing trade opportunity into like February. That's my statement. There's going to be sellers along the way. The biggest one, the closest biggest one is 77, 76. The big one is 85 for 2 reasons. This, and also the machines will start selling the trend, because look, if it's descending trend, that's about where they're going to start fighting it. They're going to try to do this. If it goes below this one, stop out. You do not want to finish that scenario, because that scenario is unfolding and the downside target is tremendously lower. But let's cut it close. Let's say this does not happen. So from here, 102, let's stop here, 160. So you've got $58 of downside from here, which puts it at $50 a share. And that's not giving all of that credit. I'm not saying it's going there. I'm saying if it makes a new low, I would stop out so I don't find out how low it goes. I have an iron condor on BA. I like it long term. There's no reason for it to go here or there. I sold the 190 put. I sold the 255 call, and the range has been there.
All right, Nick. So whenever you're ready, just before anything, would be nice to get some closing remarks here from you on the market and why all these folks should join in there.
Okay, so if I still need to say why, then I failed. But join in, because it's free, people. It's free to try. You put up the money up front, but the money comes back to your account. If you don't like it, it's my job to keep you in there and make you a believer. We do good work. We do honest work. You see the effort I put into it, and that's day in, day out. I still have 2 articles to write today, and I haven't even started them. And I have to prep tomorrow, and I do a couple of more videos. So the market, don't short the market. Don't listen to the people on TV. During the September correction here, when everybody said, that's it, we're going down because of this and that, and whale this and whale that. And I said, you can't fight free money. We have $5 trillion, give or take $2 trillion, to burn. They're still in the economy. They just can't evaporate. People are going to have to spend it. We're spending fools in the US. We can't hang on to anything. We have to spend it. So something has to break this market. So far, that's called the black swan. You can't trade on the black swan. You can't short the market because you think the black swan is going to happen. That's ridiculous. It's like me going out and saying, I'm going to put a bet here that we're going to have, I'm not going to even say it. Something to do with earthquakes. I live in California. I'm not going to even say it. So anyway, if we break above this one, I don't think this can hold us. And if we break above this one, we have a 10% rally. Don't short the markets because you hear it on TV. Do your own homework. Short the market because it loses this, because then you buy it back down here. And if it comes down to here, I would get long here in size for trade. All right. I'm out of energy. I'm out of time. I loved it today. This was the funnest one I've done. And I don't say this. This is the funnest one. I promise you. I cussed a few times. I've never done that before.
Yeah, I'm gonna need to hire a producer here to bleep you all day, Nick.
Samuel is asking if I do stocks. However you trade, I promise you, you will be better in our room. Habibi Nick. Well, if you were Lebanese, that H would have been a 7-digit, the phonically spelled. So let me see. It finally joined. I'm so excited. All right. Is it Jin?
Shout out, Jin.
All right. Or is it Kate? I don't know. Or is it Kate Carr, the last name, and Jin, the first name? I'll see you there. There you go. Shuma birthday. Okay. Anything I want. Here's a question that blows up computers. Shufi Mafi, right? That's in Arabic. We say it all the time. It's like, hey, how's it going? Hey, Shufi Mafi. But it actually, if you translate it, it will break any computer. It's like, what is that isn't? Okay, I'm out. Am I okay? How do I join your train?
You're all good. I'll
all right.
Stay here.
Right? Okay, cool. I appreciate you folks. I'll talk to you later.
All right, Nick. We'll see you in the
chat. We'll talk
room.
about Oxygen in there. Hubert, join. Or is it Christophe Hubert? Hubert Christophe. Allez-y.
All right, guys. So that was Nic Chahine. Okay, that is the leader of the Options Inner Circle chat room that I'm showing you guys. This is basically where we are all day. So if you have a couple questions right now, let me know, throw them in the chat. I'm just going to be here for a couple minutes so that I can answer any questions you have before the deal expires at midnight. Okay, so it's like about 4 hours from now. Kowalski, yeah, prices will go up in February. So right now you guys are getting the extended Black Friday special. We are including so many things here, everything that you went over with Nick, the group meetings that we have on Sundays as well. Mohammed, this is not on Discord. This is not on Slack. This is on Benzinga's proprietary technology. It's in our Premium Ideas portal. Once you sign up, you're going to get a welcome email. You know, everything's going to be ready, good to go. And we have a full team of staff and technical support, you know, people that can help you if you have a question. AI, email me for sure, man. Absolutely. I'll be willing to work something out with you. Mohammed, you're welcome, man. Samuel, there are people in the chat room that only trade equities. Not everybody's trading. Some people are trading Forex. Some people are trading crypto. Some people are trading, you know, equities, options, for the most part, options. Rotishola, this price is for the year, but you keep the 78% discount for life. So as you renew, prices are going back up in February, and you're going to keep the 78% discount. Even if the price goes back up to the original one, which is like 6,100, you still keep that 78% off. No, Kowalski, that's something different, but feel free to email me and, you know, we can talk about it. Zach, no, the chat room is not audio only. I don't know if you guys can see the screen, but this is the chat room. There's a video here that Nick has posted. He's always posting videos like every day. Education, every trade comes with education. Kowalski, let me put that email for you there. 1 second. For the guys that are on YouTube, guys, I'm posting the link there. I got a bunch of questions here on the Zoom chat, so I'm gonna try to do both of them at once. I'll throw the contact there. The entry is the annual fee, Rodishola. That is correct. Yes, that is for the year. It's not monthly. It's for the year. So you get everything here and the complimentary new Google Chromebook that you will get that you don't have to return to us. That's for you to keep. All right. Kowalski, I put the contacts there in the chat. What is the schedule of the chat room? It's 24/7, guys. Nick is there during the weekdays. He's there during Sundays as well, doing the sessions, the live sessions on not YouTube, on Zoom. Those are private, just for chat members. So yeah, in short, Kowalski, yeah, prices will go back up very soon. So we are extending Black Friday for tonight. Kowalski, no, it would have to be definitely a debit or credit or PayPal. Zach says he's in. Yeah, I saw that, Zach. Shout out to you, man. Be there or be square in the morning. Okay. We have a game plan early, early. Okay. We're not waking up at 10, 11 a.m. and trying to figure out, hey, what do I trade today? We have a plan, guys. Nick puts in like 90% of the work. Your job really is to just be there in the chat and just literally just looking at following the conversation because the conversation is ongoing. We didn't start this yesterday. It's been going. There's things that we're, entering, things that we're leaving. In the weekends, we adjust the portfolio. So it's fluid, like the market. Zach, so I would say, I mean, people are there messaging very early. So even though Nick wakes up, I don't know, I think like at 1 a.m. or something like that because he's in California, you don't have to wake up at that time. He's going to have everything ready like about 8:30 a.m. And you just hop in there. You see, and that's just in the morning. There's a midday recap. I'm going to try to scroll up here to show you guys, but the conversation is so active. Everybody's so engaged, ready to learn. It's a great environment. Kowalski, you're asking, okay, can you share your journey with Nick so far? How long you've been following him and trading him? And if I'm, no, I'm not a multimillionaire yet, but I can tell you that Nick definitely has helped people that do have multi-million-dollar accounts in the chat room. So personally, me, I was only doing calls and puts when I started. So it was a very volatile account. And once I started following Nick's strategy and taking his approach to options, everything took a quick turn for the best. And as option traders, we get lured into these, screenshots of like 1,000, 2,000% gainers. Those are very rare, So I got tired of playing the lottery and I just decided that I wanted something consistent, something that I can rely on, not just trying to hope for a rally because you really don't know what's going to happen tomorrow. But with the probabilities of success being so high on Nick's trades, on the setups that he does, it does give you that peace of mind. And trust me, option traders don't know what that means. So it's a different way of trading options, I'd say, Kowalski. All right, I'm posting the link here, guys. If you have any questions, right now is the time before we close the stream. I have a bunch of emails here. I've been trying to get back to some of you guys. I know a lot of you already joined. Yes, Zach. So Nick's chat room is the trading room, right? So that's really, I mean, we call it chat room, but it's more than that. It's like a community, but it's like we just label it a chat room, but it's way more. As you can see, all that Nick puts in there. Kowalski, as far as like finding strike prices, I definitely would say that like I would talk with Nick specifically. Everybody has a different account and different risk profile. So very important to keep that in mind, but you can chop it up with Nick and you can direct message him if you have specific account questions for your account. John Harwell, the price today, 78% off is $12.97. So you keep that 78% discount even at renewal next year. So it's not going to renew at the full price at 6,000. It's going to renew at $12.97. Bijen, I'm putting the link there in the chat. If you need me to email it, just drop your email and I'll send you a quick one. I don't know who he is, Bill. Who is trading on 80K account? I don't know. You're welcome, Bijen. You can use the link there if you want, because I know this is gonna, I don't know until when the laptops are gonna be there, but I can tell you for sure that if you don't see one in the checkout, you won't get a laptop. So I don't think they'll be available till midnight, but if you do see one, you'll get one. Kathy, chat members get the recording as usual. BRG, is this different from the, yeah, it's definitely different course, different people. So guys, I'm going to go ahead and drop my contact there. I'll drop the link. If you guys want to join, I highly encourage you. It's a great program. Irene, I'm going to drop my information again in the YouTube chat and feel free to reach out, guys. We're here to help. I'm going to be around answering emails for a couple hours, and anything that you guys need, just, send me an email or call me. So yeah, Kathy, even if you know nothing, it doesn't matter what level you are. There's people that have started from the bottom straight up and you can see the progress. I mean, and they talk about it in the chat. Zach, if you haven't gotten a laptop, email me. Okay. I'll get you in touch with the laptop department and we'll find out what's the status on that. Thanks for reaching out on that. Appreciate it. Irene, if you haven't, let me paste that. It's in the description too, guys. Everything I'm pasting is from the description, like my contact and the link to join. All right, Irene, I put it there for you. Manoj, we don't have monthly, it's only yearly. That way you get a better deal and you're locked into that rate. So the 78% off is for life. You're welcome, Zach. Okay, guys, so this was an amazing session. Nic went hard. I appreciate all you guys being here, taking the time to invest in your education, invest in your mind, in your strategy. Kowalski, yes, 7-day money back guarantee. So there's no commitment, risk-free. You can go in, try it, see if it's a fit. If it's, I mean, it's a great deal if you can even try it out. I know a lot of places do not give any sort of money back guarantee whatsoever. And I've tried a bunch of different services. I can tell you that Benzinga not only has high quality, but they even are so confident. Like we're so confident about this that we'll give you a money back guarantee. Doesn't make any sense, right? So it just goes to show, guys, that we are here to help and we're willing to show it and prove it to you with everything we do. Everything's quality, guys. Everything's about quality. Zach, let me email you. I think you emailed me, Zach, because I emailed some guy named Zach right now. I don't know if that was you. Okay. Kowalski, yeah, you could try it for a week for the 7 days. So, all right, guys, I'm tuning out. I appreciate you guys being here. Thanks for being so diligent with the education. You have to do it. Nobody else will do it for you. Join the community. Join Nic, right? Join us as we trade. We trade the markets, volatility, and start looking at different results in your P&L. If you don't like what you're seeing in the P&L, give this a shot. 7-day money back guarantee, guys. So I'll leave the links there. I'll leave the stream here for a bit, and we'll see you guys on the next time. Thanks for being here.